All right, what is going on, everyone? I know it is a nasty day. Looking at SPY right now, it's just nasty. Near the low of the day right now when we're just starting it. So we'll see if we'll go to the close or so and walk it through. I mean, it's been nasty. So some of the things I am personally doing is I'm like 75, maybe even a little more percent, or probably about 75% cash or so. I have a couple swings that I'm still in. Of course, they're all getting crushed, but I'm still in them. And those are either oil plays. I have a mining play, so kind of sticking commodities in a sense, kind of in a way. And then what else do I have? I have one drone stock and then two bio stocks, and then an online gaming stock. And like that's really it. But the swings, I trimmed some of them. I cut a bunch of other ones. The thing is, you can always get back in. You can always get back in once the market stabilizes. So there's no need. The way that I see it here is that there's no need to just kind of keep averaging down at this point. Yes, to a degree, buying the dip was amazing. It worked great. We get like a red day and then we get a bounce for like 3 days. We get 2 red days, we get a big bounce, right? And that worked until it doesn't work, and we're seeing it happen right now. It's not working. Looking at SPY right now, it's at the end of the day, right? It's in a sense a good thing. Just let it flush out because the rebound, we're gonna do great. Like it's gonna be just fine. The problem is when the rebound comes and you can never time the market. So in a sense, right? If you bought puts, if you had puts from 2 months ago, you could have kept buying puts, but your puts, you would have lost money. And then now all the bears coming out like, I was right. See, I was right. You worry, but you can't. So you can't time it. That's why, always having some cash on hand is key, right? And I know people who are getting crushed because they kept buying and averaging down. And I hear you on that. It worked and it made sense. But again, eventually that strategy doesn't work. And now we're seeing it happen right here. So it literally, PLTR is the only stock that I have that's green, which is hilarious. It's still looking like in the range that I want it. So PLTR, I love it right here. Personally, it's a long-term play for me. So I'm not worried about this one. It's showing up on my watch list here because I have it in my IRA on here. At least it's showing up under my positions, but actually some of these PLTR here and FRX are the two that I have started putting in my IRA. But FRX I think is going to be just fine as well. So the oil plays, HUSA was one that I still have. I shed some of it because it popped up It popped up to 255. I shed some, and then it's come right back down. Oil's up. So if we take a peek, let's pull up. Here's another thing that's scaring people like crazy. 10-year yields are up to 1.54. So over 150, these things got kind of, was where we got scared, a couple weeks ago last week. They came back, and then boom, Powell started speaking today. They just shot straight up. So that was kind of one of those things. Yeah. And Powell bought puts. I mean, that's literally what it is. Man. Let's see. Yeah, when it comes to the dip, that's the thing. It's like the way that I see it too is that in my long-term stuff, these are the days to be buying. I have no problem buying more on my long-term accounts. It's no big deal. this is how it kind of goes, right? These are the days to buy. And so I'm holding all that stuff because I have kind of longer horizon on that. But the reason why I sold most, I'm 75% cash in my short-term account, is because there's no need for me, right? Playing the penny stocks, right? Most of the time, market takes a dip, these things get crushed, right? So the market's taking a dip, they're getting all crushed. Why am I going to keep holding stocks that are all going to go down 5%, 10% per day? For example, VISL, down 22% today. I scalped it this morning, but it's down 22% today. Market's down 2%. Kind of makes no sense, but, right, that's the type of stuff that you don't want to have 7 of these stocks in your account, and that's what we're seeing right now. Small caps are taking the brunt. Now, VISL, I think also, if you want this one long term, it's coming down a lot. Yeah, it certainly has some room to come down. I think this is a legitimate company. Like this is going to be one of those legitimate companies. Give it a couple months, give it a couple years. This is not going to be trading under $10, I don't think, in a couple years, if not sooner. That's my take on VISL from everything I've looked into. That's why I'm holding this one in the account as well, because I have more of a conviction on it, right? When you have more conviction on your trades, it's easier to hold them through some of these types of days, and that's the only stuff that I'm holding. Same as the oil plays. So LGHL, yeah, that one is just kind of relying on Bitcoin. So what do we got for Bitcoin? What's Bitcoin been doing? And this is interesting too. It's kind of coming down today as well with the market. Bitcoin's down like nearly 3%. It was recovering nicely, and we saw yesterday SOS pushing up, the short seller report and all that stuff. all that aside, SOS was pushing up pretty nice, but Bitcoin's coming down. So a lot of the Bitcoin stocks, the crypto miners, they're all getting hit today. But it happens, right? There's just across the board. Look at SPY. I played, wow. But see, here's the thing. Like when we take a step back, I know if you're down huge right now, understand, look at what's happening, right? This is just a straight down drop. Don't sell when the market's at the low of the day. There will be somewhat of a bounce at some point, and that's where you can get out. And so what I did for when I sold some of my positions today, I sold into this kind of push up. Powell started speaking. The market was actually green. The second he started speaking, boom, plummet, right? So then once we kind of saw that, I was like, okay, let me just make sure, let me get rid of the last couple things I don't want anymore, and then, we'll reassess. When you have a lot of cash available, right, the second things stable out, that's when you can really hammer the stocks you want, and there'll be some massive, massive upside. Look at this. Look at this. Look at this candle on SPY. Massive red candle, but the more fear, right, it's like, okay, everything's piling on. Just might as well just keep selling. Everyone at this point is getting to that point of like, I'm just going to sell. And so that's what you're seeing. I mean, we're at the low of the day down 2. We're going to be down like, NASDAQ's down 3%, Dow's down 2, S&P's down over 2. It's nasty. It's a nasty day right now. I don't know, but I wouldn't say it's a short-term correction, crash, whatever you want to call it. We're seeing and it's not really a crash, right? If you want to go back to a crash, right, here's your crash, right? When you saw the market go from, SPY go from like 340 down to 218 in like a matter of a month, that was a crash, right? But again, look at what we're doing. Look what's happening, and look what we saw back in September. So we're seeing kind of a similar, if we take a peek at how much of a percentage move this actually is right now. So from September, from the highs back in early September to the lows that we saw at the end of the month, we were down 10% on SPY. SPY was down 10%, okay? And it took like 3 weeks for that to happen. So if we go back to here, from the highs that we saw like 2.5, 3 weeks ago to where we are at right now, we're only down about 5.5%. So you kind of can see this isn't actually that big of a drop. Like, I know it looks nasty and it sucks, but it's actually not that big of a drop yet. I mean, from the highs. Now, intraday, 1 day drop, this is a pretty big drop for 1 day. Down 2.5% is pretty big. When the last time we saw a day down 2.5%, you've got to go back to September. Is that true? Let's pull up September. Yeah, this was a pretty nasty day. This is down like 3%. So yeah, so you got to go back to September to get a day like this. And we may beat it at this rate. We're going straight down. It's just, if you look at like SPY right here, 5-minute chart, literally this is when Powell started speaking afternoon. Literally from 12:15, that was the first red candle. 12:15, boom, little bounce, boom, and then just straight down, and we're just going straight down. Okay, so now we're looking at, okay, where do you want to find support here? I think we're actually getting to pretty favorable areas. I think down under 370, I think there's a pretty solid support down there. So, down under 373, upper 360s, 365, would like to see that hold. Worst case scenario, could we drop below? Sure. But I would like to see like 365 or so hold up if that's what happens. And 3 days down is, I think, 3 red days. And we had 3 red days, I think, last week into 2 weeks ago, but they weren't as just straight down. I'm going to have a video soon too on the channel going over the candles. So there's a difference when you see the hollow red versus like the hollow green versus the solid red. Red means it was down compared to yesterday's close or the prior day close, but the solid bodies are actually, they mean they're a little bit different. So I'm going to have a full video going over all that and then the other types of candles there are too. So NEPT, I had to cut NEPT. I had to cut NEPT because it fell under 150 and then it started to just look kind of gross. The market looked gross, so I cut NEPT in the 140s today, and looking back, that was a good move. Yeah, here's my thought process on NEPT too. Could it have recovered, and could it recover? Yeah, sure. Once it gets back over 150, then maybe there's another shot to take. You can take another shot. The problem is that when I look back at the 4-hour chart, right? Yeah, we fell below 150, and many times that's why I use mental stops, right? Because I don't want to be in a stock that just keeps kind of that goes down below my stop loss and then recovers quickly. The problem and the reason why I felt strongly that wasn't going to happen was because under 150 we had, if you look back, we had prior days of doing that, but then we quickly recovered, right? It was like a wick down and recovery, right? We look back even to recently in the past couple of weeks, a wick down here to like 138, but then recovery very fast intraday. We didn't get that. We kind of got the solid continuation candles, solid body reds holding below. And that's where I said, okay, I'm going to get out. And the market just didn't look good. So that's when I cut it. And, I saved myself 10 cents, so far. But, again, there's always a chance to get back in. Esports pick up Real Luck Group. I'm in ELYS. I guess it's a similar type of play. ELYS is holding up. I like that sector. I like the esports. I like online gaming. I like that sector in general, just going forward. What do we got? ELYS, yeah, it's for me. I'm gonna give it a little bit more kind of downside. I'm gonna be fine holding it. This one rebounds pretty nicely, so I'm fine with it. PLTR is now red. We were just watching that a few minutes ago. It was green. Semiconductors, yeah, that's not a bad idea either. Yeah, the only problem is that this is the time. So what I'm doing right now, and what I think a lot of people should be doing, is long-term stuff. Right, here's your conviction trades long-term. I think I'm telling you guys right now, Apple. If you want to buy, if you haven't gotten into Apple yet, I pulled up the wrong ticker. AAPL. Apple's down 2.5%. Yeah, it's cracking this downtrend line. Yeah, could it come down more? Yeah, but if you don't have a long-term position in like a stock like Apple, right? Here's where you start taking like a nibble. Start adding a few dollars in, and if we eventually bottom out, Apple comes down towards like 100. Then maybe that's where it bottoms out and we get a reversal. But I think that Apple's going to be a beauty. You're going to look back at that in like 2 years and be like, thank God I bought that. I'm so glad I bought it when I did. I think that's a no-brainer. How much am I down for the week? If anyone really cares, since I went mostly cash. I was actually green on the week this morning. Took some scalps and then just, and I'm mostly cash. So let's see, what am I at? Down $2,000, which isn't, for the account size of like 50-ish. It's not terrible. Down 5% on the week isn't bad. It was worse last week. But again, you take your hits, and then ideally you don't want to lose and give back all your profits that you made from the prior months. And that's exactly what we're doing. We're not, it's not going to happen. That's why you go cash and make sure we reassess, and there'll be so much money to be made on the flip side. SPY is down almost 2.5%. That's ugly. That's ugly. We had a decent dip day a couple weeks ago where it was down like 2.5% or 2% or so. But yeah. Oh man. Forward after the dip. You mean the ticker symbol forward? I think there's two different. Is there a forward ticker like FORD? Yeah, there's forward. There's a ticker forward. Forward is the stock, which this thing could come down a lot more. And then ticker symbol F, the car company that's dipping. Yeah, this has been uptrending pretty well, but down 4%. It's actually not that bad. It could be a decent dip, and Ford's been doing well. If we take a look at the weekly chart on Ford, it's done well. It's gotten back over this 11 area. It's gotten back up over 12, or it recently did and pulled back. So it does look pretty good. It looks like it wants to make a lot bigger move up towards like 15-ish is kind of the idea, potentially. So, yeah, ticker symbol F. I do like. It looks okay. We have this downtrend. This is like this overlying downtrend, roughly, that it's broken out of. So it looks good. If it holds above this 11.25 area, that would be a good spot for it to hold, and it is. So it looks okay to me. Apple since August only down $3. That's not bad. It's not a terrible time to buy more. You have a share. If you have more money to buy more Apple, I think that's one of the stocks that you buy more of. Look at this. Look at the kind of volatility on HUSA today, for example, which is why I sold some. Oil's up. This is an oil stock, a penny stock, right? So this is the types of stocks I like to trade, which are getting crushed right now. So swing trading is just not. This is not the most ideal market for a swing trader right now. But there will be a rebound at some point, and that will be where a lot of money is made. So these are the times too where if you have the ability to just there's no need to do stuff. Like if you're like, people say like, hey, I'm struggling now because people jumped in. Everyone got in after GameStop stuff, and you're struggling now. Okay, well then build out, open your IRA, build out a long-term account, start buying into whatever you have, whatever amount of money you can afford to put into a longer-term account. start looking for good deals, start there. And then, if you really, really want to get into short-term stuff, you can start dabbling into it. And that's how I kind of think people should go. You start with a long-term account, make sure that's set up in the background. Then if you want to go into short-term, start with maybe start swing trading. And that's primarily what I do. Although, right, clearly it's not an ideal time to do that right now. So you have to understand, okay, let's take the little cut here. Let's not lose the entire account. Take some small cuts on the wrist, fine. And then we assess how the market is. And then once we kind of understand, okay, here's the new sector that's hot. Here's what's hot. Eventually things will stabilize and we move on. Now, I will say, like, if you go back like a year, I can't remember like a year plus ago, almost every stock correlating to the S&P or correlating to the overall indexes as much as they do now. It seems like no matter what happens, if the overall market's down, everything's taking hits. Everything is taking massive hits. So it's kind of crazy, but that is the nature of the market that we are in right now. So it doesn't matter what you have almost, And I don't remember that to be the case, like, a year ago, pre-pandemic, I would say, or even at the beginning. I don't remember that to be the case, like, for a lot of the beginning, maybe the spring, early summer last year. But it seems like, at least recently, it's like a scare tactic almost for a lot of stocks. So we'll see if I would say maybe 370 now on SPY could hold, which puts us like right here, getting close to the lows we saw in January, end of January. So, but I think a lot of people look at this two different ways. You can look at this and say, oh my gosh, right? But you can also look at this and say, okay, there's going to be a nice rebound. So, and I think Monday was a dirty bull trap. I mean, it was like markets up 2.5%. That's what I said. I was like, you know what? Like, that's not really good because in the eyes of, and at least in my eyes, it was okay. We pushed up 2.5% after being down the last 2 days last week. Okay. Now we're right back within shot of all-time highs. We were within a 2% shot of all-time highs on Monday at one point. That's like, okay, everything looks good. Everyone probably starts buying again. And then the next 3 days, boom, just get taken to the woodshed. Yeah. No, yeah, everyone's down, especially if you're a swing trader. Don't even your long-term accounts. This is how it is, right? You're going to be down huge on the days the market's down. Long-term accounts, swing trading accounts, they're going to get crushed. But again, right, it depends on the stock. If you have conviction on the trade, you hold it. If you don't have conviction on the trade, that's your opportunity to cut it. If you're just playing it based on technicals, or you're playing like, okay, this could be a sympathy play to this sector, then okay, you know what? That's probably a good idea to just say, okay, let's get out of this one and move on to the next. There's a lot of stocks that I wish I had, cut earlier. Like, for example, PLM. I have pretty small positions on these things. But the reason why I like PLM is because there's an underlying kind of support here. It's still down towards like 350, so I'm going to give it down to there. And it's also a mining company, so they just had good news like last week or 2 weeks ago. Popped to 540. I think there's a bigger move in store. I thought there was a bigger move in store. Obviously now we're heading bigger move to the downside, but the market's down. And here you're kind of diversifying yourself to a degree into the commodity sector, right? A mining company. So I'm in oil mining companies, and then for now, and on my short-term stuff, and we'll see how things bounce. Rug pulling the retail, yeah, that's what it is. It's pulling. It's everybody and their mother and their grandmother got into the stock market and thought it was the next best thing, right? You guys probably, if you guys haven't seen, there's like some TikTok of someone saying, yeah, like I just buy stocks when they go up and I start selling them when they start going down. Like, it's that easy. Like, that's when you start seeing stuff like that. That's the signal of like, okay, somebody's got to pull the plug. Someone's going to pull the rug out, and we're going to move on to eventually let's wipe these guys out. Let's let the hedge funds, the big money's going to win here, and that's it. At the end, that's how it works. So you're kind of seeing it, right? Everyone was joking, and we're talking about how, this GameStop stuff, like, giving it to the hedge funds. Sure, maybe short term, but they're going to get you. Make sure we're okay. Reconnection successful. Hopefully I didn't cut out for too long. Okay, we're back. Let's see. Yeah, so we're back. Market's down, bouncing a little bit. So what I think you could do, another strategy that has been working fairly well too lately, is if you're watching like on the 1 minute chart, like look at this, like see this, how we consolidated down here, like the low 370s. It looks like SPY wants to bounce back, right? So it looks like the market wants to bounce back, and I would say a shot to like 375 could be in the cards. So we could even, this could be a spot where if you're looking to scalp or looking to get back into a trade or to get into some other trades or make a few percent here and there, you could probably find some pretty low, cheap plays that get a little rebound if the market continues to push back up. So I would say, SPY may bounce from 373 to 375, and maybe it pulls back, but you get a short-term bounce. You can see some recovery in some names. Mara and Riot, you're just going to be correlating to Bitcoin for the most part. So if the overall market's getting crushed and Bitcoin's up, they might take some hits or they might do okay. But the market's up and Bitcoin's up, that's your like double whammy for Mara and Riot. I think they're fine. You just have to trust Bitcoin, and it's a longer term. I think it's a longer term swing. So look at Bitcoin down 2% today. It's actually bouncing. Look at Bitcoin. It's doing a very similar thing that we're seeing with SPY, right? Here's the Bitcoin 1 minute chart. Let's go back to SPY. Very similar chart. So they do correlate to a degree. And I think we're maybe starting to see a slight kind of, push away or pull away in terms of Bitcoin correlating to, that degree, but we'll see. So now it looks like SPY is getting some resistance up around here. Maybe it comes crashing down here. Hoping ARK F will keep dipping. Yeah, I mean, I've had my ARK things, my ARK funds, and I've just been letting the dividends reinvest into buying more and whatever. But I like the ARK funds, and I think people are like, oh, she's getting crushed. Kathy Wood's getting crushed. Sure, she's getting crushed now. Everything's getting crushed now. She's gonna probably rebound and 10x what most people can, what most people are gonna do, 10x most people's portfolios, and once this rebounds, so it's like. I do personally. I think that they are going to be just fine. Let's see. Oh man, nasty day. Let me fix this thing. Okay, there we go. Yeah, so look at that. SPY's bouncing, and you're going to get these bounces, and it depends on how we'll see how much it holds up. But why would I say why would it potentially bounce up towards like the 375? Well, because that was a prior support. 375 held up about an hour ago. And now we'll see if we can make a shot up there. If we can reclaim that 375, then that could be good. We could actually have a strong close. So, yeah. I'm trying to see if I want to potentially buy something that I'm currently in or something like that. Just trying to look around and see what's down a lot. Because you can take advantage of this. I mean, it sounds stupid, but if you think about it, right? Like for someone if you're a scalper, right, and you're going larger size on the scalp, look at some of this. Like ELYS is one example, right? From the bottom, it's up 3% from where it hit, So a lot of times day traders they're loving, they love taking that 2%, 3%, on a day trade, but they do that 3 times, 4 times, 10 times in a day, right? And it adds up, right? The pennies add up. PLTR went back green, so that's recovering pretty well with the market. Market's now only down 1.9%. Economists worry about inflation. I think we're seeing a lot of fears with that. And look at the 10-year too. So the 10-year is up to over 1.547 now, 10-year yield. I don't know. I'm personally not a huge. We'll have to see. That obviously right now we don't have anything, but the worry is going to be people when the stimulus checks come out, when everything starts reopening. Meanwhile, Texas is now back to normal to a degree, right? It's like they announced, I think next Wednesday we have, because that's where I currently live, no more mask mandate, and so I guess every place it's up to you to determine if you want to require a mask before you enter a store or shop or anything, and places can go back to 100% capacity. So I'm sure the bars and stuff will be packed and jamming. People are worried that okay, everyone's gonna get their stimulus check, and then all this new money, like 40% of the money in the supply has been created in the past year, right? So everyone's gonna be worried mega inflation. Maybe, I don't know. I think a lot of people are gonna put that money into the markets and into other things too. So I think you're gonna see kind of, I don't know. I have no idea. Neo, I think Neo, I love Neo. Neo came down. Look at where it came down to. A beautiful spot in terms of support. So if the market keeps going down, yeah, Neo can and will fall through that support. But if you don't have Neo as well and you like the EV space and you want to be getting some exposure there, Neo is another stock I like as well. I wonder what Tesla's doing while we're speaking about Neo. Tesla's getting crushed too. Tesla's down, below the lows from last week, down 7%. But it's a stock that's going to get hit pretty hard when the market sells off. TTCF, let's take a look at the chart for this guy. I have some in my long term. I would love to get more though too. Yeah, this thing is coming back. I mean, I like TTCF a lot too. I thought it would make a push over 30, and it probably will at some point, but the weakness in the market took it down. So we were getting close. I thought we were going to eventually break out of this kind of range and to push up to 30, but we just, Tesla's getting crushed. The funny thing with the Fed and the funny thing with Powell is that he came on to talk today, and he just the markets did not like it. The second he came on, it was like, oop, nope, he's done. And he came on around noon. So here's where he came on, popped, drop, quick rebound, and then boo, down. So yeah, so you guys kind of see what I was saying, how we're getting a bounce, and it looks like we're going back to 375-ish. Okay, 375, just to put that line in really quick, is right here. Now, okay, we got close. We hit 374.56 a minute ago. Maybe we're still uptrending, so we'll see. But that's going to be the area to watch. If we can get back over that level, maybe there's some support or there's some strength into the close on such a red day, some recovery into the close. Still a lot of time. We still got just under 2 hours right until the close. There's still a lot. Entry to Tesla, I personally don't think it's a big deal. Tesla's one of those stocks for me as well, where if I wasn't in, I already have Tesla from a while back, so my average is significantly lower than where it's at right now even. But if I wasn't in, it's a day where if it's red, I wouldn't mind buying some. It's not necessarily a stock that I'm like, I'm going to plan out my entry super much because if you're taking a trade, then yes, I would say more of a planned entry is better. But for me, it's more of a longer term play as well. So it's not really I'm not super concerned with the specific price I get. If it's down 7% today, it's probably not a terrible day to buy, especially how it's been down a lot lately. Here's your kind of downtrend on Tesla. So until it gets back over 700, it's probably in this downtrend, for the near future. It only took Biden 50 days to destroy the market. That's the thing. People are joking. This is not politically biased in any way, but people are joking it would be really nice. Now you're looking back, we could use a Trump tweet right now, because he'd always come on and be like, the stock market is the best. He would just come on and say something like that, and then all of a sudden the market would just go up. Everyone's like, yeah, everyone just buys. The Trump pump. Let's see. What else do we have going on? Tesla's okay. Let's see if we'll see if SPAC can get back up. It's trying. We'll see. But a lot like I was just saying, some stocks, I'm looking at stuff I'm in, bounce decent amount. So if you're patient, if you're waiting on, someone mentioned HJLI. This was not looking good. I will tell you that. Today's not looking good. The stock's down 14%, which is why I had cash available for it. But also I'm not looking to buy it today, personally. I would let things shake out. You're probably still going to be able to buy this thing sub $7 even if the markets are up tomorrow. So that's maybe a time I would be like, okay, things stabilize a little bit maybe, and that's when I would be looking to buy it. So yeah, my take on it is I'm going to give it a day or two, because this is an example of it came down to 624. So as long as it closes over 625 today, it's fine. If it closes below 625, that's not good, because we haven't had that. If you look back to the left, this is a big wick down to 525, 528 actually, but then it recovered. That wick means it recovered. It didn't actually close down there. So that's the only thing with HJLI that I'm kind of worried about on it in terms of the technical setup. But again, waiting on news on this one. And I think it's even one that I would be kind of fine just holding my position and letting it kind of ride out and adding into it once the market's stabilized. Then I'll add into it, because they're going to probably drop news soon. Only issue here too is that if a company drops news, these traditional penny stocks that are running up on news, look at the biggest runner on the day. It's SLGG. What is it doing? Yeah, it's not terrible, but there's no 100%, 200%, 300%, 1,000% runners. So even if a stock got news, it probably only pops 25%. Maybe it depends upon the news, right? It can go more, but you probably aren't going to get as big of a push. Support and resistance is useless when the market's just tanking. So yeah, that's the thing. Support, the way that I see support and resistance is it's great on individual stocks to help when the market's somewhat stable. But when you're seeing the market just doing what it's doing, right? If we look at SPY, right? It doesn't matter. Nothing matters. And that's why I give stuff a little bit of a longer leash on days like this. I'm not just going to immediately start cutting stuff just because it cracks support. So I that's kind of more of a feel thing, which it's tough to say, what to do exactly. It's kind of like I kind of feel around and say, okay, here's what I think I'm going to do on certain short-term stocks. So we're getting there. I mean, again, we're still putting in a higher. If you just look at, if we're broadening things out on SPY, still higher low is being put in. That's still technically a higher low right here, but down towards the upper 360s would be interesting if we do come down and test 365 or so. So essentially the bond yield thing. So the 10-year yield, the way you have to look at it is like, if this goes up, right, it entices people to take their money out of the markets and put it into bonds, out of like stocks, and put it into bonds. Because you're going to get you're going to get a guaranteed yield here, right? Whereas if there's uncertainty or risk, you're like, well, okay, I could put it in the markets, but what if it crashes, right? That's people's thought process, and so I'm going to put it into bonds. So understand, well, the key number, at least lately, has been 150. Over 150 on the 10-year has been like, okay, market comes down. And we saw that last week, and then now we're seeing it again today. Powell started speaking. I mean, I guess he said what it seemed like he said the right things. Like he said the things that you would think would keep the market, would push the market back up, or kind of say, okay, inflation risk is, they're not worried about it right now. Okay, he keeps saying that stuff, but it's like calling his bluff in a sense, right? Seems like. But meanwhile, also something to watch is crude oil's up 4.19% right now. That's why I've been liking oil plays. So I'm keeping my oil plays. I in this type of market, you don't want to be buying like, the penny stocks and whatnot, but I'm keeping the oil plays, and, we're going from there. So let's see. Diamond hands. The other thing about diamond hands, and I'm probably going to make a video on it. We'll see how this stuff shakes out. But the problem with diamond hands and that whole thing, is that it's essentially encouraging bag holders, right? So being a bag holder is someone who's going to keep holding a stock. Like if they're like, for example, GNUS. Let's see, GNUS is, this thing hit over, $11. So GNUS, the reason why people say bag holders, but like, there are people who bought this thing up here and are still holding it because they still believe in it. Now, maybe this thing ends up going, recovering to a degree, but that's the issue, right? You create bag holders, and so I just don't want people to become bag holders in stocks. Like that's why I think it's important to understand, like, markets down, buy the good stocks, right? Buy the apples, buy the solid companies that you want in the long-term portfolio. Even the speculative growth stocks. If you like them, buy them in the long term. Buy them and just don't and kind of forget about them in a sense. But the short-term stuff is where it's like, okay, let's not be a bag holder here, right? So that's why I cut a bunch of stuff, like NEPT. For those who know, I was talking about NEPT as a good play. It was holding a 150 support in the cannabis sector, kind of an unfound cannabis play, and it popped up when like Tilray was popping a little bit and stuff, but then it came right back down. And I'm not going to be a bag holder in NEPT because NEPT could come back down to it could go to like 50 cents for all I know, right? If you go back to what happened in July through like September of the prior year, all the penny stocks that went up, all these stocks that went up, they just went on these insane downtrends, and maybe it's unwarranted. But look at ZOM, for example, right? I'll pull up ZOM. ZOM, everyone loves ZOM, but again, ZOM went from in the summer months, in the early summer, right, in like June, July, this thing was up at like 30 cents, 25 cents in June, and then from July on, this thing went down to 6 cents. So the thing went to 6 cents. I don't want to be the guy holding ZOM because I believe in their. At the time, I was like, they're putting out PRs. Hey, True Forma's coming in 2021. Okay, cool. I'm not gonna hold ZOM the next 6 months as it dies, and then who knows, right? Who saw this coming, right? I mean, I don't know, but you could have, and it paid off now. But I'm not gonna be the guy holding that and tying up my cash in that. I just don't see the need to do that. There's no discipline. That's the thing. There's no discipline in the diamond hands. The diamond hands is something to do for like Apple, Neo, like stocks that you like longer term, that you just like, hey, I'm going to hold diamond hands. And it's funny because to a degree, it doesn't matter, right? Yeah, you're probably going to be fine, right? It's not going to, a lot of the stocks, if you're holding the S&P 500, if you're holding an ETF, you're holding VOO. If you want an S&P ETF, that's a solid ETF. That's going to, give you a little dividend. It's going to model the S&P to put your money. The S&P, go back to the past couple of years, has never made a new high, right? So we see these dips, but it recovers. So, something like that, you can put your money there. Even if you see a short-term downtrend or short-term crash or whatever, 3 years from now, you're probably going to be green, probably. So it doesn't matter. Bounce on Buzz. I kind of like, I think it's a cool idea. How has it been doing today? It's probably, trading with the market. So, yeah, I think it's an interesting idea. It wouldn't be a terrible. The thing about Buzz too that you have to understand is that the way it works is that if the more people who buy it, it doesn't matter. It's not going to run the price up. So you don't have to worry about I'm buying it. I'm not going to buy it today because everybody's buying it. Well, it doesn't matter. It's modeling a collection of stocks. So however that collection of 75 stocks or something does, it'll do. And you can look into the holdings. I think you can find the holdings of Buzz. They're actually in Apple. They're in these bigger name stocks. They're in Zoom and stuff. They're not in random penny stocks. It's actually legit. But it's I like the concept because it's cool because the social media era is here to stay. And for those who don't know, this has to do with Dave Portnoy, right? So he's been the one that's been talking about it lately. And so people came to him with an algorithm saying, hey, we have an algorithm that models, that takes 75 stocks that are the hottest stocks on social media, right? Based on, trends and based on what's going on to a degree, right? They're not just going to buy random penny stocks. But they take that and they essentially, you have an ETF comprised of those stocks. And so however those stocks do, this ETF will kind of follow. And so now it's going to model to a degree, it's going to model the overall market because right now we're seeing almost every stock is being weighed down by the overall market, by SPY, by the S&P. So market's down, every stock's taking a hit. But the idea here is that in time, these stocks or this algorithm will outperform the overall market. So if you would rather, essentially, it may make more sense to put your money into something like this rather than an S&P ETF. But at the same time, these stocks probably do bad when the market's down. It's probably going to do worse. So for example, it's down 4% today. The market's down 1.5% right now, which is actually recovering a little bit as we speak. So it's going to be we're going to have to see how this goes. But I'm curious to see on the green days how this does. Does this perform? Does this go up when SPY's up 1%? Is this going to go up 3, 4, 5%, which could be interesting. So I think it's an interesting idea. Now you guys can see this 375 where we're at the area. So this is a consolidation right here on the S&P. So if we can break back above, it looks like 377 to break out of this consolidation that we saw from about an hour and a half ago, then it looks like we could even potentially make a shot towards getting closer to even at the close if this does kind of happen. So we'll see. So now the way that I would see some of your positions, if you're looking for something and you're okay, where do I buy? Don't just buy as the stuff's coming down for a short-term trade. If you're buying for long-term, again, just slowly accumulating shares. But you wait for somewhat of a bottom or a consolidation to be formed. Now the stock market's coming back, and now you can look into something that's still getting crushed. For example, if you're looking at a stock I don't know. Here's one that I've been messing around with, kind of scalping. So HEPA, right? This is not a stock I'm saying buy the stock, but for example, the stock came plummeting down. It was down over 10%, hit 175. So I bought some, I already had some shares from before I trimmed, and then I rebought the shares that I trimmed. So it's only 500 shares because I'm not looking to play, and there it goes, it just got filled. I'm not looking to play big. I'm just kind of, honing, sharpening the tools in a sense, making sure I can scalp stuff so that if I really, was in a pinch and had to make money, I can still play some scalps. But I bought this thing in the upper 170s and I sold it at 183. Well, why did I do that? Well, because the market was getting crushed, things down over 10%. If the market recovers, it's kind of a play on the market recovering to a degree, this stock will bottom out and recover some of the gains, and it did. And so now I made a few bucks off of those shares, and that's kind of the nature of some of the scalps. And I have a video on the channel too going over how to scalp stuff, and it kind of is the same idea, right? When you find the overreaction, so the market's down, which in and of itself was probably an overreaction, right? Why was the market down 2.5% a half hour ago? I don't know, probably an overreaction to a degree, right? There's a lot of factors, but to a degree. And so finding then the even bigger overreactions in individual stocks, and you could be all cash and just say, okay, this stock is down 20% today. For example, VISL was down 22 or 23%. It's now made, if we just take a peek, it's made a recovery off the lows to where it's at now, 8%. So you don't have to capitalize on the 8% move. You could just take a piece, take your 2%, take your 3% of that move, and now you can set yourself up to make a few bucks, even though your swings are green. Or if you're all cash, there are people who are scalpers. That's a scalp. Now you're green. Everybody's red. You're waiting for the opportunity to set up. Boom, now you're green. So there's certainly so many ways to make money even in this type of market, which I know it sounds crazy, but for most people who swing trade, it hurts. But the day traders are probably doing just fine. Now it's even that it's slower, right? There's not going to be as much movement. It's slower. You want to take your profits fast, cut your losses quick, but people are making money no matter what. Long-term stocks that I like. Well, actually, right now, PLTR is one that I like. It's holding up very well. It's up 2% today. PLTR is one. The other one I have in the IRA, in this IRA, is FRX. It's the merger with Beachbody, a SPAC. I like FRX a lot. So those are two that I'm building out in the long-term accounts for longer-term moves. What else? Neo is one that I like for a long-term move. Tattooed Chef, TTCF. Is a stock that I've been buying in the long-term account. It's actually coming down closer to where I think I bought in here somehow. I almost timed this, not on purpose, but I was like, yeah, I like that chef. And I bought it down here. And then my average is like in the 14s. And then, it's up, but it was up, I was like double on my position, 4 weeks ago. But those are some of the ones I like a lot. And I'm also different from my long-term. Like, I'm not going to be the guy that's going to go say, hey, like, I'm only going to buy the S&P 500 ETFs. Like, I'm not going to go buy VOO as all of my money. I made a video going over my, whole portfolio setup a couple days ago. But I split up my money into some. I have a chunk that's speculative. I have a chunk that's kind of a cash flow or a cash park in a sense. And then I have some for, value plays. I'm looking to use that, and I'm looking to use that to beat the markets year over year. So if I can return on average 20% or more, I'm really happy with that in that account. And since, being 22, right, it's great because now that can compound for a long time, right? So that's the goal there. Then I have this account, which is the Webull account, which has about 50,000 in it that we play with more short-term stuff. And so I've been doing well lately, but right now I mostly swing. Of course, swings are great until the market decides to say no. And the market's saying no to us now. So we'll reassess. It's going to be fine. We'll find out. We're not going to lose all the gains we made, and we're going to be just fine. We're going to, come back. The bounce, look at the bounce that we already have on SPY here. Beautiful bounce already. I mean, it's like a 1% move back up. Didn't miss too much. Some of the market mounts here, though. So there was potentially a lot of scalp opportunities in the past half hour. If you saw this consolidation, it was like, okay, this SPY looks like it's bottoming out, I'm gonna play it for a bounce. Now it's in this consolidation, so if we may get a fake out, so it may come up here and then may just kind of pull back down for the day. I mean, I wouldn't be surprised if I would, to a degree. I don't want market to go down, but at the end of the day, I kind of do want just a full reset. Let's let this thing come down, let it do what it wants to do, and then let it bottom out. Maybe it bottoms out here. Maybe it bottoms out at 365. And then we can kind of start our kind of, I would be much happier with a slow grind where the market doesn't move more than 0.5% up or down intraday for the next couple months. It would be a lot more it would be a lot easier to understand, okay, here's the kind of the trend, here's the pattern. What do we, how do you capitalize on this? When the market's volatile and it's just plummeting off like this because of people fearing, interest rates and fearing inflation, then it's tough to identify much of a strategy other than if you're a scalper, a day trader, or if you're you're playing the fear indexes or you got a bear case on the market. So that's what's going on. Let's see ONTX. ONTX was down below 95 cents. That's nuts. This thing got hit 88 cents earlier. It's trying to bounce, but I mean, it got crushed. Hit 126. Oh man, that thing got destroyed. But I mean, there's a lot of stocks that are going to be like this. And even if the thing is too, so if you have conviction, this is actually great for if you have conviction on your trades. you're getting good dips. I mean, you're getting beautiful dips. I mean, actually, as we speak, VISL. I mean, I have an average at 350, so I'm not gonna add to it right now. I'm not in any need to add anything right now. I have what I have, and I'm gonna just let it ride for now until the market settles. And then when I decide that, when we kind of realize, okay, things are settling down to a degree, okay, that's when we can take the 75% cash on the side and just put it into our trades and make money on the rebound. That'll be the big win. GME is pushing. Let's as we speak. Yeah, this setup looks pretty good for GameStop. It gets above this 150 again. This could be interesting. GameStop could get interesting. Maybe take a shot to 200. Stimulus wise, the thing that's funny with the stimulus is that I don't think it's a big deal. I think we'll have to see once the checks hit people's hands, then we'll see. But I think realistically, right, it was all priced in. We knew it was coming. Right? Everyone knew once Biden got elected, okay, we're going to get stimulus. Here's what's going to happen. And this is what's going to happen, right? Once we kind of knew their number, got the 1.9 trillion. Okay, cool. Pretty much knew that even if Republicans don't want that, the Democrats can pass it no matter what. So if they had stalemates, it would get passed. So we kind of knew that anyway. I think it was priced in. I think that you saw if you look at SPY, I think the stimulus was priced in on the move from back in here all the way up to where we hit the highs. So that was kind of your stimulus price in to a degree in my eyes. And now, coming back down because, okay, what's to look forward to? What do we got? Average down on PLTR. I think you're going to be looking good. The platform that I'm using, it's in the pinned comment too, is Webull. That's the link to it. You can there's still 2 free stocks with that link. There's a description link and there's a pinned comment link for the platform. Free trading, and you get full extended hours access from 4 a.m. Eastern to 8 p.m. Eastern, which is why I like it. So yeah, for sure, especially for people who are beginners who want to level up from like a Robinhood, you get a lot more here and you can customize things a lot better. So that's why I like it. GME is red on the green days and green on the red days. Yeah, that's the core. I'm telling you, that's the correlation that I've been noticing. GameStop decides to push, and when GameStop decides to push, that is when the market decides to say, let's pull out the rug. Let's see. Neo, I like Neo. Neo is interesting because it's in a really good spot. If the market bounces from here, Neo is probably going to bounce from this level. The only thing is that if the market decides to plummet, or continue to see downside, then Neo is probably going to fall below this support. But it's got some good support in this level. I took a trade on Neo, which I usually don't do I wouldn't do a short-term trade. It's more of a long-term thesis on that one. But I took a short-term trade on Neo from back in here. They did an offering. The stock fell into 38 in the pre-market. I bought it pre-market. And a 2 to 3 week trade, I sold the thing up at $50 to $60. So it was fun. That was a good trade. But I didn't trade. It wasn't options. It was just shares. I traded options on SPY today for a scalp because I saw it drop below the low of the day. So I saw, okay, further downside, and it worked. The thing with options, though, is that I'm not a huge fan of trading options because people try to trade options across stocks, which is great. But if you have more experience and you know what you're doing, then you can be just fine, right? But if you don't know what you're doing and you're like, okay, well, I think the stock's going to go up, so I'm going to buy call options so that I can make more money when it goes up with less money. I get it for tying up less capital, so it makes sense. But you can also get screwed. So, for example, there are people who had FSR, and I think we'll talk about Clove in a second. But FSR, for example, right? Even back in here when you bought, or whenever they first came out with options, if you bought options on FSR and you thought it was going to go up, sooner than it did, you ended up getting crushed because you're fighting the time. And that's not what I like to do. I don't want to be fighting time as well. Meanwhile, I've been selling covered calls, and I sold a covered call at $32 for this week, expiring this Friday, and it came up just close. So I could have gotten taken out, but then the market pulled back. So that ended up, as a solid play. But Clove, I think a lot of people are going to get screwed on Clove because people are looking at Clove. This thing hit under $7 today. That's crazy, right? I have it in my long-term account, but I don't have, crazy amount. And I sold a covered call when it was up a couple days ago on Monday. But Clove, if you have options on Clove, I think this is actually going to be this company will be okay. The problem is that it's a long-term play at this point, especially with what's going on. It's going to need to come back, right? So it's going to take some time. And you can't expect, I'm not expecting Clove to rebound from $7 to $10 tomorrow. Like I'm not, unless they had some crazy news or something crazy, I'm not expecting that. And so I don't think you can expect that. And so with that said, if you're buying options that expire even in like March or April or May or even June, right? This stock may end up recovering to $20, but it may not happen until like next year, or like it may not happen until like December. That's why I prefer shares. I'm fine with waiting a little bit longer, but I can at least minimize my risk to a degree. And the way that I see it too is that it's already hard enough to beat the markets. So if you're okay with just making your 30% or making, whatever percent instead of your 100 or 500% on the options, if you're fine with that, then there's a much higher percentage, chance that that's going to hit and that you'll get that when just trading shares. And so that's why I've transitioned, or that's why I trade now small cap stocks shares, because the stocks already move enough. They have that volatility. They can move quite a bit. They're not going to move like Apple in a year. They're going to move a lot more than Apple. It's all about the timing. It's all about technicals. It's all about catalysts. So that's at least my take on that stuff. Slowly going. I love GNOG. It's been taking some hits as well. I have it in the long-term account. Yeah, I mean, it's getting back down to where the lows were. So this is a decent spot, I would say, to start potentially accumulating some GNOG. I think Tesla's good at this price. I'm a long-term. I have a long-term thesis on it. So maybe in the short term it comes down, but I think it's good at this price. Move forward. That's the thing with when it comes to the panic. That's what's happening. We're just seeing straight panic sellers, and it's hurting the market to a degree, right? Obviously, things are getting crushed. This isn't a crazy move down. You're just seeing a lot of underlying stocks that are kind of that have been running up massive lately, getting hit harder on this because everyone gets scared, right? And so when there's panic, when there's blood in the water, everyone gets scared. And so what do you sell first? Your first thing you're going to sell is your speculative investments, your speculative trades, which are most likely the small caps, the penny stocks, now the SPACs, all that stuff gets crushed. Then you go and if you really are scared, you'll sell your Apple. Yeah, you'll sell your, you'll sell your Amazon or Google or something, maybe, but not as much. You're not seeing as much selling there as you're probably seeing in terms of panic selling with a lot of underlying stocks that are more speculative. IDEX, I would stay away from a lot of these things right now. IDEX has a lot of potential room down. No matter what you think, bull, bear, on it right now, I think there's a lot more potentially room down. So let it stabilize, let it kind of develop kind of a consolidation like something like this, and then you can grab it and hammer it on once you've kind of confirmed, okay, it's bottomed and we're getting that reversal, then you can play it. I think in this type of market, I love buying bottoms, and many times I start buying something before I probably should, or before I can clearly tell it's bottom sometimes, and that is not what you want to be doing right now. It's just not the secret sauce for this type of market right now. Until we get some more kind of clarity. And I think another thing too is that with the stimulus checks, once that comes, that's going to potentially, we'll see how that goes. But I think if the market's like this, people are still going to be scared. They're not going to want to put their money into the market and risk it as much as people may think. Although I don't know, we'll see. NNDM, I think NNDM probably got crushed today, right? Yep, it felt right. This is my buy range between like 950 and like 8, but it got crushed and fell out of that. So maybe I would say you can look to NNDM, see if it holds up in this area down towards like $6 would be maybe a spot to hold NNDM down to, worst case. Because why 6? Because you have a spike right here back in October. It was resistance again here in November, and then it was then support in December. So that area is pretty key. Prior resistance, prior support, probably going to be a pretty good area to watch the downside if NNDM keeps falling towards 6. I don't think it would go below unless the market continues to pull back. So yesterday, right, you thought, okay, maybe NNDM doesn't go below 8. Market goes down massive today, and it goes below 8. So EV's getting hammered. I think a lot of commodities are where you want to be. The oil sector right now is where you want to be. Now, I'm in the speculative oil stocks, so I'm not in your best names. But you look at ExxonMobil, Thing has been killing it, absolutely killing it. And I think this has a lot more room to go, you know? So this thing pops up here, pulls back, double bottoms down at like $30, and then it's just doubled since then. So that's good. I think ExxonMobil can get back up. It could certainly get back up to like 75. I wouldn't be surprised. Back up in here wouldn't be, you know, out of the question in my eyes. So yeah, let's see what SPY is doing right now. It's interesting. It's down 1.5%. So yeah, so now it kind of, what it did was it pushed up and it got rejected in this consolidation. So if it gets above this 376 again, that could be a decent close. We got about an hour and 20-ish till the close. So we'll see. Let's see. I mean, we can honestly, I could be even a fun trade idea too. SPY calls into the close if we get above this like 376, you know, and hold above that level. NNDM has a ton of cash. Yeah, they do have a ton of cash. 6 billion cash. That's the other thing. That's the problem with NNDM too, is that they need more. They need more in the background, right? Like they have done all these offerings, they raise all this money, but they need to see some more kind of progress, I guess, business wise. So that's the thing that I think a lot of people are skeptical on it. I'll trade it, but like Bingo, BNGO, BioNano. This thing I believe is, yeah, it came out of this box. I was like, okay, maybe it holds up this box. It's not doing that now. We can get rid of the box actually. But it's one of those, right? This thing got so much hype. It got pumped to a degree, right? Social media, the hype, I call it a pump, you know, wasn't like one guy pumped it, but it, you know, a lot of stuff. And then it's again, it's a speculative trade. It's a speculative investment. So when these things are the ones that get hit hardest, when the market says, nope, these things get hit hard. So SPO recover. Let's CCIV. I think if you want to grab that too for a long term, where is it even at? Oh yeah. Yeah, I would say this is a good spot. Again, be careful here. Don't just expect it to be up next week if the market recovers. But here, I think this is fine. CCIV under $25. That's actually probably really good for a long-term trade or for a long-term investment too. It's speculative, right? Because you don't, you know, how is this going to go and cars hit the road? But I think it's going to be like Lucid's going to be just fine. I think. So. $6 for NDM's a steal. Yeah, I mean that's if it gets there. I mean, if ARK, I don't even know what is ARK. Is ARK buying that? Let's take a peek. Let's see. NNDM. I'm curious to see what they've been doing lately on it. So they've been selling. It looks like, yeah, they've been selling lately. They've been selling NNDM. And what I saw an interview with Kathy Wood too, and she was saying that. What they did during the downturn last year was they trimmed from like 30 stocks that they had the highest conviction on. And so they'll do the same thing again if they anticipate that. And so it seems like that's what's kind of happening as of right now. Now the ETFs, they're getting killed. I mean, the ARK ETFs are getting crushed right now. If you want to look at like ARK K or something, off a cliff. I mean, yeah, but that's kind of just the nature of it too. When the market's down, they're in all the high growth speculative stuff to a degree. They know they have more conviction behind it, and I would trust them over like a guy like anyone on the internet, because they have professionals, right? This is the stuff that they've been doing for a lot longer than a lot of other people. But yeah, getting crushed. So yeah, look at that. Look what I just said too with the SPY. Look at this. So it's recovering, and this is going to be an interesting finish. So let's see. Let's see, what do we got? So this is kind of the range. If it gets above this right here, this 76, it's probably going to have, I mean, I wouldn't be surprised if it sees some resistance up here, but if it gets above that line there, that's the top of that consolidation from midday, or, here's your kind of range, at least that we were trading in for a while. So we'll see. Yeah. When the market comes back, the ARK's gonna be fine. Like if anything, I'd be buying them right now. Buy those, ARK funds. So they'll recover massively to the upside. If you wanted kind of to feel safer in a market recovery, you know, is put your money in some of the ARK ETFs. I would say is, you know, to feel safer. If you're not confident in yourself, picking your own stocks, or you could just watch what they buy and buy your favorite ones. That's the thing. People always talk about like, okay, well, how can you make more? How can you do better than ARK? Well, you can follow what they buy and just buy what they buy and not pay the fee. This site is Lucid Tracking, lucidtracking.com, to see some of this stuff. There's like a free version. There's like a paid version to see like deeper into it. So I can see that stuff. Look at that. So SPY is pushing up. This is interesting. And if the market closes down less than 1%, I'd be impressed. I mean, like this could be a bullish looking candle. Why? Because we have this massive wick to the downside. But then if we finish up here, like over like 378, if we finish over 378, and like this would be like kind of like a hammer candle, which usually you kind of see a reversal like off a hammer candle. So it's showing you, yeah, we had sellers, but the buyers came back in through the second half of the day and really finished strong. And so there's a lot of buyers here. So that's what look at that. Look at this. Just ripping through. Now the next level to watch is right here, this 378. So I honestly should have taken a SPY call or something for fun for the stream. Let's see. SLGG, is that pushing up into the close? It may push up because we're getting some more kind of. Oh, VWAP's right here. It's got to get over the 725. Then that would be interesting. That's the VWAP, which I'm gonna have. For those who don't know, I'm gonna have a video on that soon, as well. How to trade VWAP. It's been, you know, day trading wise, been kind of boring. So we will see. Let's see what else. NNDM, I think, yeah, NNDM will be back over whatever. It'll be back over $10 before long, once things stabilize to a degree. BNGO is not speculative to a degree. I mean, it obviously everyone has different time horizons on it, but it's still kind of in that. It's in that category, right? To a degree, the thing has moved massively, like massive ups and downs. So you're gonna have, when you have stocks that move to that degree, those are the ones that people fear because it's up so much. They fear the most. They just sell it. So they get the most paper hands, I guess. Took 20 SPY calls when it was down 374. Nice. That was nice. That was actually really nice. I mean, looking back. Not that you want to time a bottom, but this consolidation could have been a decent idea for a SPY trade. Yeah, could it have gone down more? Yeah, but at that point, it was down 2.5% already. SPY's down 2.5%. Chances are we don't close down that low. Could we? Sure. But chances are, so that would have been a really good idea. But back in here, this consolidation was a good spot too. And now it's, you know, we'll see if it can, if it can, we're within reach of getting under, only being down 1%, which would be nuts. Can I borrow some beer money? Madam, let's see the damage. I'm like 75% cash. Let's see what we're at. Okay, so we regained $500 in the past like hour, which is pretty good. So, you know, I was green at one point this morning on the week, and now we're only down $1,500 on the short-term account. So I don't even want to look at the long-term account. I'm sure I'm down like a, you know, ridiculous amount today because I'm in those, you know, I'm in the Neos, I'm in the Tattooed Chefs, I'm in the, you know, FRX, I'm in PLTR, which has been up. PLTR has been up. It's up 3%, and it's doing pretty well. But that's been only a bright spot in my portfolio, my long-term portfolio, at least today. GNOG, I like. Let it bottom out, let it get quiet, and let that one just kind of do its thing for a while. I have it in my long term as well. Yeah, the ticker spam stuff, I'm not gonna even. If there's no like actual comment with the ticker, I'm not gonna even bother with it. NAKD. This is NAKD. I'm curious actually to see how many stocks. This is back under $1. I think it's probably, to be honest, here to stay. Yeah, it doesn't look good. I mean, 50 SMA at like 80 cents, so maybe, but I think NAKD is going to come down for a little bit until we see some more strength in small caps. I think this is going to be one of those that just kind of gets crushed. Stimulus is coming. I need my check. Can I get my stimulus check? Let's see. Yeah, if you guys are going to put out something like, say if you're going to put out like a stock, right? Just say like, hey, what do you think? Like, give a thought on it before, you just drop a stock, because it's just kind of it's not useful when people just put in random stocks, SPCE is another one that I have in the long term, but I sold wow, I didn't realize it's down that much. Yeah, I had it from like $25 and I sold it at like over 50. Looking back, I probably should have sold it all. But no, yeah, this could recover quite well. I have some. I have like half of what I definitely have half. I have half the shares, I would say, than what I originally bought or had an average at 25. And then I sold half on the spike. So I pretty much made like 100% or more on the play. And then it came back down. So I'm pretty much playing with house money in a sense from what I have left. So that's why I feel like I'm just going to ride it out. I'm going to ride this one out for now. Yeah, GAU, I do think that's a decent idea, because I have this could be, okay, let's see if it holds $1. It tried to kind of consolidate here, pushed up, and then it pulled back. Everything's getting hit. But this could be good. I would say commodities, right, is where you want to kind of potentially be right now, right, to a degree, right? Oil, gold, I guess. So, and plus the stimulus coming, that's not a bad idea. CRMD for 5%, nice. SNDL is one that a lot of people are always asking about, so I mean, I might as well mention it. It's actually holding up better than I thought. Well, it's down 10%, 11%. But if it holds up in the 110 area, I think it's okay. But I don't like it though, because of they have a shelf offering on file, $1 billion shelf offering, so they can pull from that whenever they want. And if they do that, I wouldn't be surprised for the stock to go back under $1, because now they have no incentive to keep the stock over $1, because they hit their minimum bid requirements by getting it over $1 for 10 consecutive days. They hit that requirement, and now it's like, okay, cool, we're good. We can remain listed on the NASDAQ. Cool. Until they get the next call from NASDAQ saying, hey, get your stock back up over, $1, until they kind of hit that next threshold of being below $1 for long enough. Yeah. Although this is a very kind of fat float, so it doesn't move very fast. If you kind of look at it, when there's a lot of selling, yes, you'll see the move, but you kind of see a lot of barcoding. So if you zoom out, when I say barcoding, look at this. This is kind of like barcoding, where it's just moving like 1 cent. That's like barcoding. I don't like seeing that. It's all algos. It's not like, okay, no one's buying this thing and moving this thing at all. Plug along. Let's see. How is plug? It's probably gotten destroyed. Okay, well, okay, yeah. It's I would say here's a line in the sand, right? 37-ish. Unless you're intending to be a longer term holder, 37 or so is the area to watch. Now, I always talk about plug because it was a free stock that I think Robinhood gave me like long time ago when I first opened an account with Robinhood, and I remember having it, and I was like, yeah, this is cool. I think I sold it at like $20. Went to 75. It's nuts. But yeah, 37 I would say is a good area. It held up there pretty well last week. So if we can stay above that, that's a good sign, and it's also prior resistance. So, yes. Big money trying to push this out. I think so for sure. I mean, look at what's going on. SPY's just bouncing back up to a degree as we're speaking. Yeah, getting it. We'll see if it can close less than 1% down. That would be nuts. CCIV I think is okay, but I wouldn't be worried about it today. I'm thinking it's a long-term play. So SOS is interesting. They had the short seller report Then thing pushed up yesterday, Bitcoin, but I think you're actually seeing more of a correlation with Bitcoin than necessarily a short squeeze on it. People are freaking out about the SOS short squeeze, but it's actually not that bad. Like, I think it was more so a correlation yesterday to Bitcoin going up and SOS being the cheapest of the Bitcoin mining stocks, or one of the cheapest of the Bitcoin mining stocks, compared to like Mara or Riot. You can buy SOS for like $8, right? Or pay for like Riot 50 plus, whatever it was yesterday. So that's why people kind of like that. CIDM. 3D printing. PRLB. I think a lot of people are very, very bullish on 3D printing. I had XONE was the free stock that Webull gave me. Let's see, XONE. Yeah, this is another one of them. If you want another idea, I think it's not a bad idea for a longer term hold. XONE. The thing with this one is that it went from $10 to 66, and now it's back down. So let it pull back, consolidate, and then that's a shot to take another shot. Head now. All right, I'll see you later. Big buyers pushing us out. Yep. So what you're seeing is just manipulate. Like why is the market down so much? And I think you're just seeing somewhat of a potential manipulation. This is what happens all the time. So they want you. When I say they, right? Who's they? You can think of. There's no definition to they. It's big money, hedge funds. It's market makers. It's essentially the people who the retail guys are going against. But they are the ones who are kind of, in a sense, right, selling, right? We can see market manipulation if all of a sudden there's a big support buyer here or a big seller here, right? Sometimes it's market makers, it's the big money, it's the hedge funds to a degree sometimes, and then that in turn can manipulate the market. So if you think about it simply on a scale of like looking at level 2, now this is level 2. This little piece right here, I know it's a little small, but this is level 2. So the way that you look at level 2 is that if you're watching a stock and all of a sudden you're seeing a big, like on the ask, you're seeing a big, like I wouldn't use it for SPY. For example, let's look at like VISL. If you're seeing a big seller, like for example, VISL doesn't have any huge sellers, but if there was all of a sudden somebody right here that had like a massive order in comparison to the rest, that could be kind of a way to manipulate, because, okay, you're looking at level 2 as a retail guy. There's a big seller at like $3 and like, let's say 4 cents. I'm going to sell before that. I'm going to sell because there's a big seller there. I want to make sure that I get out before him, or that's scaring me. Somebody with a lot of money is trying to get out. I'm going to get out. So that's kind of the manipulation that you kind of see. And many times, sometimes you'll see that kind of work on shorter term scales with certain stocks that are moving up intraday and stuff like that. But I guess you can bring it to the larger term scale too, to a degree. You get a lot of selling, you get a lot of panic selling, everyone starts selling. And then meanwhile, while you're selling, the big boys are buying, they're buying your shares. And then when next week we're back up, they're going to cash in on those shares. So, SPY double top. Let's see. What is SPY doing? Yeah, it's got to get above. Okay, maybe it will right now. This 377.5. If it can get above that, we can see. It looks like it wants to. If it can get above this, it's going to probably go. Looks like it. 377.50 is the resistance, at least for right now, on SPY. You get bored of people asking them the same stocks. Yeah, probably. I enjoy looking at a bunch of stocks. I follow a lot of stocks, but there's a lot of stocks that you just kind of see, and a lot of times that's what I have the second channel for, to make kind of videos on stocks that I can notice a lot of questions on, in a way, because I know that there's a lot of people who are asking questions, and so if there's one person, there's probably more, right? Big Bitcoin moves the S&P. That doesn't make sense too, but it seems like that's a correlation. Bitcoin's moving with the S&P. Can I buy call options on this channel? Yeah, that would be interesting if that was like a thing. CCIV, Palantir. Yeah, that's not a terrible idea. I would say that if you're buying both of those, don't look at them next month and say I'm down. Look at them in 2 years and say, okay, maybe I made the right decision, or maybe I made the wrong call, and you can decide that in 2 years. I wouldn't freak out about that stuff. Let's take a peek. Let's take a peek at the account. How is the swing account faring? Now, mostly cash, but things came back. So what are we at? We're down 1,500 on the week, which isn't that bad. Considering the swing trading aspect, I did take a bunch of day trade scalps this week, more than I've ever taken, at least in recent weeks. And they were good. A lot of them made money, but I wasn't going in big because I'm just kind of testing the waters on strategy and stuff. So I made a few bucks here and there. So, I could be down probably closer to 2,000 maybe on the week for most of my swings, but Neo and SPY got the same pattern. Yeah, to a degree. It seems like everything is getting hit with SPY. So the app that I have is Webull. There's a link in the pinned comment in the description box for like the free stocks promotion that they do. But this is the platform that I'm using. I have a video over how to customize it. This is like a customized layout. You can go to this is like a bigger charting layout. We can even just hang out here for a little bit too. Just because it's bigger to see, easier to see. And so TRXC. I haven't touched this one. I don't even know the details, to be honest, of it, but it is holding up quite well in this market. It's holding up quite well. There's your kind of uptrend. So until it comes below like 350, then it's actually looking okay to me. And I think Neo definitely is 100% a buying opportunity in my eyes. If I've been buying, and if you had cash and you like Neo as a longer term play, I would be buying. Apple, same thing. Same thought on that one. If you sell now, they win. Yes, but here's the problem: is that there's the whole problem with the bag holder stuff. Is that yes and no. If you sell now, they win. Yes, but depends on the stock. If you sell the quality stocks, then yes, you're going to lose, they're going to win. But if you're selling the kind of, I guess, penny stocks, the speculative stocks that really don't have much backing to them, and the way that I see a lot of penny stocks is that I trade them, but 95% or sometimes more, right? This market had me questioning that, but I still stand behind it, right? Because it seemed like everything just kept going up. But 95% are actually not good companies that will not make it or will do the same pattern, right? They raise money, they do an offering, okay? They raise cash, right? Company can survive because they have cash. They do some whatever they're doing, whatever, okay? Then they come out with a press release saying, hey, we just did this. Cool. The stock gets traded up, goes up 100%, whatever, however many, depending upon how good the news is, PR. Then they do the offering again, the stock comes back down, and the same pattern repeats. But ultimately what you're seeing is that the stock's downtrending. You broaden things out for the past 2 years, things downtrending. And that's what companies will do. And if they get caught by the NASDAQ saying, hey, you got to get your stock price over $1 because you can't stay under $1, that's our rule. Okay, cool. We'll do a reverse stock split to get our stock price over $1. And they do a reverse stock split, and they get the price over $1 kind of unnaturally, and then the cycle repeats. That's what happens with most stocks. So you don't want to be caught holding the bag and holding those stocks that end up in that perpetual cycle. So that's why you want to look into and really understand what you're holding right now. So it gives you the opportunity to say, hey, what am I holding? Why am I holding this? Do I still want to do that? If so, then that's what you keep. If not, then you dump that and you take your loss and you move on because there's always another opportunity. There'll be a lot more money made on the upside of this for a lot of stocks that bounce. This is good because a lot of those penny stocks and a lot of these kind of SPACs or even speculative stocks, they took some big hits with the market. So they're going to have some really good looking charts. They're going to be very, very good risk reward setups. So that's going to be really nice. So that's going to be, that's what I'm looking forward to. Couple months, things would back up. I mean, that's the whole point of if you're even just buying the S&P ETFs, like if you're just buying index funds, there's literally if you're buying index funds, then today is the day to buy them. Don't buy on the green days just because you got your paycheck or whatever. Hold off maybe potentially, right? These are the types of days to have some extra cash to buy. Now, okay, if you're just dollar cost averaging, fine. But if you have some extra cash, these are the types of days to go, load up on your index funds. And maybe the market keeps going down, but at least you got somewhat of a deal, and in a couple months, or at least in a couple years, that money will be worth more, as long as you're willing to kind of take the time on it, and you don't need it right now. You can copy the layout. That's good. I mean, I like the layout that I had on this page is what I use. This is what I use to trade. So I keep like the news down here, the profile. I keep it on the profile so I can see the company, basically like what sector it's in. The ticker up here. We got the big chart, my kind of watch list and positions there. The order entry, level 2, time in sales. The volume analysis, I don't really use too much, to be honest. I probably could get rid of it. And then the top gainer list. So this is like, what's hot, what's active, what's moving. Kind of like a scanner in a sense. And then I have the indexes here. So I say, okay, if I'm going to trade something or if I'm going to do something, what's the market doing? Okay, SPY's down. Okay, I know that, right? Maybe that helps. HJLI is a pain in the butt, but I'm going to play it because I do know they will drop news at some point. So I'm going to hold it. Maybe I will cut it if it does fall. If it closes below like 625, that's not a good look. So we'll see. But I'm personally that's just my, take on it though. So I don't recommend people always just follow as long as, I just know that they're going to drop news at some point. And yeah, maybe I get burnt and this thing goes down to like $4 before they drop news and I'm averaging down, I'm getting crushed, but I can probably at least almost guarantee that I'll be able to get out minimum break even on that type of trade because I've done it before and I know how these things kind of work. But now it hurts. But again, when they drop news and the thing spikes, the problem is going to be when you get news. If you get news on a stock like this, on any penny stock that you're playing for news, if you get that news, bless you, you get that news, you get that catalyst on a terrible day or when the market's sentiment's horrible. So like tomorrow, you don't want to be, if you're a company, you're not putting out a press release tomorrow. You don't want to be because market's down big today. The sentiment's horrible. You look at the gainer list right now. The top gainer of the day is SLGG, which is only up 30%, which is not much at all. So you don't want to be dropping news, right now. So it's probably going to be a very, very quiet day if I had to guess tomorrow. So we'll see. Let's see. Hyliion. I think Hyliion's okay. The problem with Hyliion is I think I took a trade on it. I was looking at it because it was looking really good. Bottomed out here at like $15 and then just fell below. So I was like, So maybe Hyliion comes down or I would give it some more time to bottom out. Would love to see it kind of get out of this consolidation range. So like back over like 19 or 20 gets interesting for Hyliion. How long will the correction last? It depends on how hard this fall is. That's why, to be honest with you, as much as it sucks, like let's get this pain out of the way to a degree. Like let the market close down 2% today. Let it close down 2%. Let it close down like 2% more tomorrow, and then we reset for next week or something like that. Get us down to like 360s in the 360s on SPY, and then that's a good springboard. I think it's a good bounce point potentially, right? It's great that you're talking to your subscribers. Yeah, the other thing with the channel thing too, like I think it's funny, and it's also hilarious too. I mean, I guess now people are interested, and some people who are serious are interested in the types of videos now, but like stock videos, you'll notice, like, or you might start to notice, but I notice because I see the numbers behind the scenes, like views just go like this. The second the market goes red for an extended period of time, just like no one cares anymore. No one's buying, like, so I don't make the types of videos like a lot of people do, where it's just every single day top stocks to buy, because the problem with that is that then it's telling people to buy these stocks. I want you to be able to be your own trader and own investor so you can make the decision yourself and not have to come back to somebody and crawl back to them every single time you want to buy a stock because you don't know what to do. What do you do? Like, if you don't have like any strategy, if you don't have that stuff, it's like, it's not really a useful channel. So slow and steady is my view. I'm not too in concern about like all that stuff and the necessarily the growth immediately, right? Just play it slow. There's no need to rush. Same way that I see it too with like the account, right? The account has been blowing up. Right? We're doing so good the past like couple months. Past 3 months even. Up 17,000 on an account size under 50K is beautiful. But again, slow and steady here. There's no need to go give it all back and then all of a sudden, then what do you have when the market bounces? You have less money than you had before. The crazy thing is that you make so much money, right, on the move up the past couple months, great. But if you then go and give it all back on the dip, on the next dip, then you actually can't make, like, you're going to make the same amount or you're going to make less on the next rebound, the way that I kind of see it. So you're setting up these big pushes in the account. Now you can scale up, you can learn kind of, you get to see what's going on, right? You're like, okay, now I got experience. I witnessed a pullback. I witnessed a mini correction or whatever ends up happening from this. And then you can reassess, and then, you know, you have more experience under your belt to be better for next time. But we'll see. It's funny how the timing is very similar to last year's 2020 March crash too. Process over stock picks. Yeah, that's the thing. That's why I have a list actually of stuff that I want to do video wise, like more candlesticks, understanding candlesticks. They're all different types. VWAP, understanding how I pick my stocks better, understanding like that type of stuff, which is more valuable. Yeah, it gets less views, but ideally, right, it's more valuable to people. So longevity, people actually will see that stuff as more valuable, and long term, right, does better than somebody who just does stock picks. That's the goal, right? But that's, you know, a longer term view. Just like the account, right? Same thing. If you're a long-term investor or a trader, right, you have their market's open tomorrow. Okay, it's closed of the weekend, but it's open the next day, and the next day, and the next day, and the next day. It's gonna be here again, right? You can go lose your money next week too, right? So, you know, there's no rush. There's no rush to lose it all or to give it all back. So we'll see what happens. All right. I'm trying to see. Yes. Now, okay. We're see how we're coming back down, but now we'll see if we can hold this area that was a prior support back at this 375. So we'll see if we can hold that on SPY. If we can't, which we were getting close, if we can't, then this could probably come down into the close closer to 2%, which wouldn't be, you know, which would suck temporarily, but hopefully, you know, we get a reset of the charts, we get some more stocks that are oversold, and we can kind of springboard on from there. Calls and shares, BNGO, DPW. DPWs, how's DPW doing? Speaking of DPW, down 16%. Oof. But, oh man, this thing took a hit. But this will probably bounce. They I don't know. We'll see. This is not. I don't think this is the same DPW that some believe. If you were someone who's been around for a long time, you've probably been burned at some point by DPW. If you just take a look at the past couple of years, if we zoom out on DPWs, look at this chart. Now, this stock actually, it's actually reverse stock splits and stuff that's causing some things. It's causing these charts to be skewed. So don't actually kind of like freak out about that. But like, look at this perpetual just bleeding for so long on DPW. But I mean, they've claimed, at least in a recent PR, that they have the strongest balance sheet ever. They have a bunch of things going for them. So we'll see. Everyone's a stock guru in a bull market. That's the thing. That's a problem, you know. And I look back. It's actually funny too, because like back in the day, like I used to make, before I went really kind of got into the stock stuff, I transitioned into this stuff as my own interest kind of fell this way. Always was a thing. I have traded options, you know, years ago before I ever had a channel, and I lost all my money, and then I did all that stuff, and then recently. Pre-pandemic, it was probably like October. If you were to go back to like October, is that 2019 now? That's where the channel shifted to like pretty much strictly like stocks, I believe, related stuff and like how-tos and like options and stuff like that as time went on. But it's funny, I went back to an old video, and I'm not going to name the names, but I found a channel that's blown up lately. I found that channel, and that channel was commenting on my videos, and it was one of those things you do when you're trying to grow a channel is that you comment on other people's channels in your kind of niche or whatever. So they were commenting on my videos, and I look back and I'm like, oh wow, this guy was commenting on my videos. I'm like he's got like 200K, like, whatever, how many subs now? I'm like, that's kind of crazy. But it's just, not the style of videos that I prefer to do, because I just don't see them as helpful. But I don't know. We'll see. Let's see. So much red, but there will be green. There will be other days for sure. Thought the dip was yeah. I wish the dip was yesterday, but here we are. And what are we looking at? Let's look at SPY again. It's teetering on that point. It wants to hold that 375. J-Pow can say everyone gets $1 million and the market tanks every time. 2019 was 2 years. That was 2 years ago. That's kind of crazy. Yeah, but the thing is, like, I've had the channel for a long time. I used to have a fitness channel too, like years ago, which is funny. I don't live stream every day. Here's the thing. So just more transparency, because I guess things are kind of cool until we have, 45 minutes until the close. Current setup is like, since, currently work from home and stuff. So my girlfriend is also working like right behind me. So I don't want to do that because she's like meetings and stuff. So I ideally would like to do, like, what I want to do, lease is up in December. So I got some time, is get a 2-bedroom, get a full-on like office, so I can do it, so I don't have any restrictions in a sense. Like, it's not like, okay, I'm in like the apartment, right? I'm in like a specific room. That's the next upgrade, I guess. So eventually I would like to, but I think what I'm doing now is like Wednesday mornings. So Wednesday morning opens, I stream Sunday nights. So we go Sunday nights up into the market. I know I had a poll. I know everyone's kind of conflicted on what time's best on Sunday nights. So I feel bad because people want later, people want earlier. I get it, but we've done the poll, and 8 o'clock Eastern still has won the poll every time. So that's what we're going to stick with for now on Sundays. But yes, that's the plan. So Sunday nights we always stream, and then Wednesday mornings, I think Wednesday morning market open is the plan. That's the plan. After this correction, might take a while. It definitely will. I don't think it's going to be, I don't think it's going to just, like, small caps now just going to all of a sudden flip a switch and just turn, but they almost did, right? People talk about, if you guys have heard, the algo switch. It's a thing, like, so like 80+% or whatever of the market is actually algos, like algorithms trading. It's not actually people. So the algos switch, and it's more either bearish or, less bullish sentiment. So you're going to get, to a degree, I have no idea. I've never actually been able to dive into one, right? But you kind of get points where it's like, it seemed like about 2 weeks ago, the algo switched, and we saw less big runners. We saw kind of more pop and drops on a lot of small caps, and then the market started to pull back. It had its pretty big pullbacks, and so there's been that scared kind of like, okay, now what? Usually, though, you see that algo switch in July through like October-ish, September, October, and then they switch back to kind of normal or back to kind of bullish into December. And when we saw December through February, most of it, to like the last week, was like algos were like turned on. It was like they were greased up old machines. Like they was like, okay, anything we get, let's run it up. On top of people also getting into stocks and be like, stocks only go up, so this is great. And it was a great time. People made a lot of money, but people also are now going to lose all that money on the backside. So we want a slow and that's what I want. That's the thing. If you don't get a slow and steady recovery, like, so what's going to happen is that if tomorrow is all of a sudden a slingshot back up 1 to 2+% on the S&P, then we're back in the same spot we were before today. So this can happen again. So that's why I say we don't want a slingshot recovery. A lot of money will be made on the upside, but I don't want it to be made in one day. Like we kind of saw Monday was a fake out. Everyone all of a sudden last week, it was like, oh, what's going on? The market's down. Oh, when looking back, last Friday was here. SPY was at 380. Okay. The all-time highs were 394. Really not that much of a pullback if we just do the percentages. What's the percentage off of that? From 394 to 380, that puts you down 4%. We were 4% off of all-time highs. That's not that much. Now we're in, kind of a point where it's like, okay, we're down more like 5-6% off of all-time highs. It's like, okay. But if you just slingshot back up, you're back at the resistance points. You're back at the same thing, and the same thing can happen again if we get some more freakouts and people, scared about what is crude. Crude's up 5%. Let's take a look at the 10-year. 10 years at 1.54. So watch the 10-year. If the 10-year government bond yield, if this is up over 150, markets are probably going to be shaky until this goes below 150, until we get some more of stabilization, right? This could be over 150, and that could be the new normal, and we'll eventually stabilize. The markets will eventually stabilize. But for right now, it hasn't happened in a while, so it's like, okay, yeah, freak out time. Go back. I mean, it was, back into... You got to go back to a year ago, really, to when these things were remotely close to where they are. You got to go back to February of 2020 for when the 10-year was over 150. So it was a year ago, before the March crash, I guess. So yeah, it's been a while. Why are semiconductor stocks? I get it, but also like the whole market's just getting crushed. So it's like anything and everything is getting hit. That's the issue. SPY is trying to hold 375, but it's just not. It looks like it's going to come down more into the close, unless it can hold right here roughly. But again, this is the time where if you're bullish on those semiconductor stocks, if you're bullish on oil stocks, which I still am, these are the time to be scooping up the shares that you want, scooping up the ideas, or just building out the lists of the stocks that you want. Put them on your list so that come the stabilization of the market, and when we start to see a bottom form, and when things start to rebound in a sense, that's where you can hammer. That's where you can take them. HJLI is getting to that point where I don't love it down here, but I'm not going to sell it because I just know that they'll drop news. So maybe I could get rid of it here, but if I sell it here and the market's out tomorrow, I can probably sell it higher. So why would I do it? Why would I sell it today? That's just my take. I'm willing to let that one play out a little more. Because I've also traded that one quite a few times and I've done fine on it. Let's see. So, okay, now we can see, right? Okay, let's go back here. Yeah. So it's not a bad thing. I mean, if the market's down 2% to the end of the day, I mean, yeah, it sucks for everyone's accounts, but it's just the number on a screen. That's the way you got to think about it too. Numbers on a screen, especially short-term accounts, you can't get caught up. Long-term stuff, yeah, that's always going to fluctuate. The market's going to dictate kind of what your account does day to day. But, long-term, you shouldn't have to, if you're in solid stuff, you don't have to worry. Or if you're just in, index funds, you're down big today, but you're also going to be fine, in 2 weeks if we recover. GE for the long term. How has this guy been looking lately? GE has been grinding. Weekly chart. Yeah, this has got a lot of room. I know people. I remember. I think I took a trade on GE a while back, and I sold it at like 7. I was in from under 6, and I sold it at like 7. A couple weeks later, or a couple days later. But I was if I just held that, it would have been looking nice. This is a good one. This could be this could be a solid play longer term. I like the type of recovery that we're going to see. And this thing got crushed and beat down, more than it. And it's getting back up to where it was this time last year, or even recovering there. But I think it looks good. I haven't followed GE, to be honest, close enough to say, oh, I absolutely 100% conviction trade. But the chart setup has range for sure. I don't know, but I'm not an OTC trader, so I don't know about the OTC stuff. Although I have, it's been doing pretty well, I think. Lately, the one that everybody's in that I see on Twitter, LTNC is that what it is? Yeah, Labor Smart. How is this doing? Let's see. This one's been funny. This is nothing. I have no idea what I'm talking about. I have not looked into this company at all. But it's one of those stocks that on Monday, right, this weekend, there was so much bullish sentiment, right, on Twitter. I just literally saw everybody and their mother was on LTNC. And then the thing hits up a high at 45 and then just plummets to under 2 cents. So for me, it's I have no interest in being in the crowded trade. I got no interest in being in the crowded trade. That's why a lot of times, to be honest, I don't, when I see a lot of people who are in a certain stock, I just tend to stay away. Just don't need to be in the stocks that everyone's in, because you're getting people who are panic selling, you're getting all this mess. It's like, I'd rather just not worry about and not have to deal with that stuff. So, they were smart rumors that athletes are getting involved financially. Yeah, I started seeing some of that too. I don't know. I haven't looked into it enough to say yeah, but JE, how's JE been doing? This is one that I was in. Yeah, it seems like it's found a bottom in the mid to low threes, and it's actually holding up fairly well in the market today, so that's not bad. This has got a gap too. Well, it filled the gap, I guess, on Monday. Up to $5 is a decent target, but it's not, and it could go for more. But these spikes are really cool. If they have some nice news, this thing can pop nicely. CCIV. Let's see how this guy. If you haven't gotten CCIV and you kind of missed out on the big move, which is what I did, now is a decent idea. I mean, I think it's probably fine. From everything that I've seen, from the due diligence that I've done, which is not super extensive like I've seen some people do prior to the merger, the amount of there were some people diving deep for this thing. They were diving deep, and hey, they were right because they merged with Lucid, but there are people who are diving deep into pulling some crazy stuff out of nowhere. I was like, wow, I mean, I'm impressed that you're going to those lengths, but that's they had the conviction behind it. Now, of course, right, this thing was great under $30 if you sold some, but now you're like, I'm going to lose my house. I might need to sign up and see if I can get, I don't know where are the stimulus checks coming out yet? I'm going to have to make sure that I request immediate access to that. I might have to get kicked out of the apartment if I can't pay rent. Well, good news is that I paid rent already, so this month's covered. The volume is nuts on CCIV. It is. But relatively speaking, it's fairly, Tuesday was the lowest we've seen in quite some time at only 35 million, which still is impressive. Do you see the video of the I have seen the video actually of the mining rigs. I saw that today. That was, I don't know what to think of it. I don't know. The thing about it is that people, you can't really, the people with the SOS stuff, there's people who are 100% all on board with it. And then there's people who are no, BS. I'm not I don't care either way. I would just trade the stock. That's it. But the stuff that I saw, it seemed like people were it seemed kind of sketch. I don't know. I think to a degree, that's kind of how that stuff works, right? There's fans and it's all these mining rigs all set up for crypto and Bitcoin mining. The stimulus stuff of SPY shooting up. That's going to be fun to see how that plays out across the markets, because if we see everything running again in a month, when are we going to get that stuff? Maybe a month or so from now, by the time everyone has a check, maybe by the end of this month, by the time it hits, maybe not, I don't know, maybe sooner. But I thought the Senate was supposed to vote on that today or something, or at least this week. I got in most positions. Similar to me. I'm 75% cash or so. So I'm mostly out. I'm only in a couple things that I like that even still are getting crushed because the market's down so much. But I'm going to hold them because I have more conviction on them. And they're either oil plays, mining plays, 2 biotechs, a drone play, and that's it. Outside of that, it's just long-term stuff I've been buying. After seeing the regs. Yeah, well, the thing is they're real. I'm not surprised that they're real. I think a lot of people are just kind of sketched out by like the address whole situation. Also, like the Hindenburg stuff too. Hindenburg has been wrong so many times too, but I mean, I don't really care. I'm not gonna get. I'm not. One's not like they always have been wrong, or it's a lot of times too with these short sellers. Sometimes it's not necessarily that the short seller is wrong. It's that the short seller, in terms of what they find, they may find stuff that they're concerned about, but it's just about what happens with price action. Do people not care, and do the people want to run it up? Sure. If that's what happens, that's what happens. It's like any other broker. If you invest in a stock that has a dividend, you'll get paid the dividend. Every time you think of this is a perfect example of you're buying the dip, but it keeps dipping. This is a perfect example. So about a half hour until the close, we got like, what is this? Like, we're coming back up to the 377.5 area that we couldn't break above before. So we'll see. I don't believe Webull does not do the auto dividend reinvest. I don't believe as of right now, but it's supposed to be coming. Apparently, from what I've been told, it's supposed to be coming. Look at this guy. So, for example, right here's an example of in these types of conditions, it's not the worst thing in the world to just be all cash and to scalp. So here's a scalp, right? HEPA, and the reason why I like to scalp on stocks that I've been watching or my swings is because I already know how they move because I've been following them. So HEPA, right? Yeah, I don't like it down that it's fallen below 2, but I have 500 shares left. So I'm just going to leave what I have and mess around with a scalp on it for the next couple of days. And I think it'll eventually get news and pop. So I'm going to play it until that happens, and I'll just scalp it until then. But the way that I see it is that, okay, this thing drops down to 175. And it double bottoms here at 175. You see two candles hitting that same level. So the stock came down there. At that point, it was down like, what is that, like 10+%? If you take a look from yesterday's close, the stock was down 13%. Okay, the market's down 2.5%. Could the market keep going down? Yes. So you understand your risk. But if this starts to consolidate and the market starts finding a bottom to a degree, okay, you might snag HEPA here, which is what I did at I bought it at 170. I just been messing around with it. I bought 500 shares at 178. And then I immediately set my sell order for 183. So what does that move? Now, okay, it's not an impressive move by any means, but in slow markets, it's not a terrible plan because look, we go from 178 to 183. That was 2.79%, so almost 3%. Okay. Now, if you add more size behind it, that becomes a decent dollar amount, and it's like, okay, that's actually not that bad. But the stock is now recovered back up to 188. So it's up more than 10 cents from where it was because the stock was there was a significant overreaction in the sell-off. We saw everyone just panic selling, and so you see all these stocks panic sell. But the second that buyers come back to a degree, these stocks, a lot of these stocks that panic, you see panic sell, you can get that 5%, pretty, 3 to 5, sometimes more % recovery like that. Now, it wasn't like that. It took a couple minutes, but that's the type of stuff that, that's there. That type of stuff is there a lot. It's like it's available. Like it's not like it's hiding from you. It's not like, oh my gosh, I'm playing some crazy momentum stock. It's up 7,000% today and I'm risking so much money because it can come down, crashing down. No, the stock's already down massive, and your downside risk is okay. Yeah, it goes below and cracks the low of the day and falls below, or the company comes out and says they're doing an offering midday, which is unlikely, but they could, or you get some crazy news against the sector day. Here in the market, will have a crash. Well, if somebody can tell me exactly what would happen tomorrow, I would love it. But we'll see. I think we could see some more downside tomorrow, potentially. Because it's Friday, people might just say, hey, you know what, let me just sell, get out, move on. Sure. But we'll see. I wouldn't be surprised to see a green day. We've had 3 deep red days in a row. Maybe we get a little mini bounce or even just a flat day tomorrow. Wouldn't be the end of the world. Yeah, apparently that's coming too, fractional shares as well. So they're all that stuff is supposedly coming. They'd taken time. So they said that they were going to roll out. Well, first off, a year ago or so, I don't know, maybe a little over a year ago, they didn't even have, over a year ago, they didn't even have options trading. Eventually they got options trading. And then eventually they got crypto trading on Webull, and then eventually they're going to do all the things that Robinhood did. Now, so essentially, once they're kind of to the level of Robinhood in terms of they have all the same features, it's a no-brainer because of the obviously with what happened with Robinhood, number one. Number two, with the other features, technical features that you get, this is a much better platform for an active trader. For Robinhood, there's still the appeal because it's so simple. It's not as confusing. So I get it. I get why people are staying with Robinhood as much as some people who are like, oh, no, why would you do that? There are people that will. Yeah, I just do a different order. So what I do is I'm going to have a video as well on hotkeys. I may even just make that tonight because I got nothing else to do, to be honest with you guys. So if you want, I can do that tonight. I can do that by, at some point, maybe like, 5 or 6 o'clock, Central Time is when I'll get to it. It's fairly simple. So you can go in and you can go into settings, you can go into hotkeys, and then there's a lot of, you can do hotkeys for anything, but then you can also go into the active trade settings and then set up hotkeys. So I've been messing around with this myself, but I have a hotkey now just to kind of mess around, and it's like I can buy the bid with was it control? I think it's Control B is my hotkey to buy. So if I go back to a stock, for example, SPY, if I click on Control, up on the top it's going to say, here are the hotkeys. Control B is buy bid. Control S is sell ask. So that's what it's going to immediately put my order in, and I have it set to 100 shares. So that's going to happen immediately, and there's no confirmation. Once I click on the buy B, it's going to do it. But I have it set to buy the bid plus 1 cent, and I also have it set to sell the ask minus 1 cent. So this way, I'm not actually putting my order on the bid. I'm putting my order on just above the bid so I can get filled, and I'm putting my order just above the ask so I can get filled on the sell side. That's kind of, I'll explain that better in the hotkey video, but that's kind of how that stuff works. That's kind of how how you can trade. Now, for certain stock, it might make more sense instead of putting a share amount, because if you trade stocks that are all different share prices, then instead of putting hotkey for 100 shares, maybe you put a hotkey for 2% of your account or 5% of your account, whatever your style is. And then that's how you can play your hotkeys. Or you can set up multiple hotkeys. So, you can do that too. But yeah, so I would just put in a new order for a scalp. So that's how I'll do it. So for HEPA, if I wanted to scalp it right now, I would just go in here, I would click on buy, I'd go into however many shares, so say 500 shares. I click on the price I want. I can look bid is at 185, ask at 186. I can put on the bid and click on buy, and it would just, go out, and if it fills, it fills, right? On the bid, it might not fill right away. If I put it to 186 on the ask, it would fill instantly. Traditionally, Fridays could be easy to see red too, but that's what I thought we saw. That's what I thought last week. If we go back to SPY, I believe Friday was green, if I recall properly. Or was it green? No, maybe it wasn't. No, it was red. It was red. Friday was red, but I think 2 Fridays ago. Maybe I'm getting a little. No, 2 Fridays ago was also red. So okay, so we've seen a trend. The market's been red the past 2 Fridays. So probably more red if I had to guess. Now, is it going to be, significantly worse than today? Maybe it gets kind of gross. On how he changes Webull settings, I already have a video on that, actually. So if you can, Webull custom layout, boom. That, I think it goes over how to do this exactly, or at least how to set up the custom layout to a degree. So that is that. What is scalping? So scalping just means like I'm traditionally someone who swing trades, so I will be playing stocks for a bigger move. When I say a bigger move, I'm looking for like probably 25+% of a move, right, of a percent gain. So a scalp is like I'm looking for a smaller percent gain. So I'm looking for maybe like a 1 to 3 to 5. Sometimes you get lucky, maybe more than 5%. But I'm looking for a small percent move, and I'm looking to do that pretty quick, pretty short period of time. Not like I'm not going to hold it very long. It's going to be a very short scalp, in a sense. So, I'll say HEPA this morning was an example, right? Where is it? HEPA. So I had some shares, but then I bought some at 178 and I sold some at 183. So I made 4 cents, 3%, whatever it was, just shy of 3% on a scalp. So it's the way that I like to scalp is scalp stuff that's already down a lot. So this way my risk is minimal to the downside on red days. So I don't really want to scalp stuff on green days. Sometimes you could, but I just would rather let my swings work for me or let my plays work for me. And I'll scalp on the red days to kind of make it less red, if that makes sense. Some of the stocks in the live. Yesterday, I didn't do a live stream, but 2 days ago. So yesterday's video, do I have any of the stocks in that video? As of right now, I don't believe I do. I don't believe I do. I may actually have Fubo and Clove in different accounts from yesterday's video. They're taking hits today, of course, but that's that. We are doing, as good as we can. Let's see. Red and green box candles on the chart, or as in on the level 2. On the chart, I'm gonna have a video on the candles, the whole candlesticks. I'm gonna have a video going over, what they mean. And there's different types too. So you can use, like I currently have hollow candles used. I like those because they tell a better story than the solid, just regular candles. You can even use Heikin-Ashi. If you take a look at that, it changes it. It's more trends. So this is going to kind of, there's more to how these are created, but there's more of it's more of an average. So that's what I used to use that. And I love people who, for day trading, momentum stocks, I think Heikin-Ashi is like the way to go. So portfolio down. Oh man, Palantir, yeah. That one's holding up nice, up 3.5%. But other than that, we're just we're letting it burn here. Neo, I love Neo for the long term though. So I've been buying it. Oops, sorry. I've been buying it and stashing it away. So I'm thinking anything under $50, under 40 is just great. I think you're gonna probably look back at that and be pretty happy. Research process. I have if you go to the playlist tab, it's funny because I have so many videos. So I don't mean to keep referring people to videos, but there's if you have a question on the how to, there's probably a video for it. But on the playlist tab, if you go to how to find stocks to trade, I think that's what it's called, how to find stocks to trade playlist. There's 5 videos in there. That's how I do it. Pretty much tell you guys what I do. There's nothing to hide. No, I don't care. I don't have a course. There's no course to buy. So that is that. Tesla crashes, Neo crashes. Yeah, that's the thing. They do fall to a degree. Neo had earnings and they missed expectations, and so that doesn't help as well. I don't use Fibonacci or Elliott Wave personally. I eventually want to get into it, but I haven't. I just don't need to. I think it's just, for me, what works best is just simple support resistance. That's it. And Neo was nuts, to be where it was under $5 a year ago or something like that. What's your advice for those who don't have any free cash anymore? Okay, so this gets into a bigger thing. So the diamond hands, here's what I say. Here's where you get to cut. So you get to cut, you can and should cut the stocks. Now, I wouldn't cut them when the market's absolutely bloody red. Like right now, if you're looking to cut something, market's recovered off the lows to a degree, not a terrible idea. You cut the ones that you no longer have conviction on, have not held support, and you don't know enough about them. So if you don't know enough about them and you don't have conviction on that trade, like you just bought because somebody said that they bought, or you just bought because it was a hot sector and it's hey, this is stock in that sector, those are the ones that personally I cut. And the ones that I kept are either in sectors that I still have conviction on, for example, oil. So I have those stocks still. I have a longer term play in VISL. I have what else do I have? I have a mining company, so kind of covers you on that front, PLM. So I'm somewhat diversified there. And then I have 2 bio plays, I believe. I have HEPA, not much left. I cut most of it. But then I have HJLI, which I haven't cut. But I know they're going to drop news at some point. So I'm playing it for the news because I know it's coming at some point. And I've played it before. So that's why I'm holding some of these stocks. But the other ones that I had, I just cut them. Just cut them because I don't need. They're still on my watch list. I can get back into them whenever I want, and then I'm building out new watch lists every single day or today, right? This is last night and today of stocks that when things settle down, stocks I want. So, one of the EV stocks I want AYRO, but I'm not going to buy AYRO as things continue to pull down. So maybe tomorrow I buy AYRO, but this thing is down 12% today. AYRO is going to be good. I played it back in here from like 6 to 10 plus, which was great. And then I'll probably buy it again here. Hopefully if I can get it down towards 5, that would be great. And the diamond hands thing is a bigger issue because I think the problem is with diamond hands is it's funny, but also that's fine on your long-term conviction trades. Like if you have like Tesla and Neo and they're down big, diamond hands, like that's fine. I think it's fine. But don't be diamond handing on like some random stock you don't know anything about. Just cut it. Move on. The chip shortage is going to hurt Neo, yes, but I believe in the coming months that will be okay. I believe they mentioned too on the call or something how that's going to hurt. So they're expecting potentially lower numbers in the next few months, but I think it's somewhat getting priced in right now as we're seeing it drop. Sorry if I'm missing stuff. Small count, sold off. Buy some at the end of tomorrow. Tomorrow, if we get a red day tomorrow, that could be a decent buy day. Usually Fridays in general are days that I like to buy into the next, setting up for the next week. So tomorrow could be a decent day to buy. Yeah, ASMB broke the bottom. That's why I'm not in it anymore because the market was super weak. So I'm not surprised that it did let it bottom out again. Maybe it holds 450. Maybe it holds $4. I don't know. Could it come down even further? Yes. So that's where I'll let them go. This could be a really good trade eventually, but I'm not going to just hold it now. And so I cut it at like $5 because I just didn't want to see it go any further, especially when the market was looking kind of weak, earlier this week. So how do I keep up with some of my stocks? I follow them like, all the time. So it's like I'm just seeing them every day. I kind of have these big lists and I create, big watch lists. So now I have over time, I just have massive lists of stocks that I've traded before or that I've seen run before for a certain sector, and so I can always come back to it. Oil stocks looking good. Bohr is up today. Yeah, it is. HUSA was a crazy range today. This thing went to 255. It was at 206, went to 255, then it went to 210, and then now it's at 222. So ASMB was $28. Yeah, they had some data that I forget. I'm mixing stock, but I think they moved on. They had something coming they were working on, and then they were like, no, we're going to switch directions, and they decided to say no. So usually that's a bad sign, like, okay, something wasn't going on, something wasn't good. So that's what happened with that one. But they have a lot of other stuff in the pipeline, so that's why I like those bottom plays, because they have a lot more in the pipeline. So all it takes is for them to come out with a press release about their other product that's in the pipeline, or their other results, or their other data, or their other timeline on the data. Boom. Everyone likes. All of a sudden, there's attention on it. Stock runs up. That's what I play those for. Yeah. Yeah, another thing too is that people who are new to it, you tend to get more scared. I mean, nowadays it's like it's just numbers on the screen with the way that I have to see it, and you can't get all concerned about it. Eventually, right? You can just go into a hole and not look at it, and probably come back to your account, and you'll probably be fine in a couple weeks if you wanted to do that. But I mean, the way you got to think of it as numbers on the screen, so you can't get emotional about it. And the way that I think it's fun for me is that I trade the stocks, I trade the tickers. I don't care about the companies for the short-term stuff. Longer-term stuff, yeah, I care more about the companies, and I got to have some more conviction in it, right? But for the short-term trades, I don't care. So like I literally have no vesting interest in what HJLI actually does. I just trade the ticker, like that's it. And I've traded it before, and it spiked off of news. I'm waiting for the same thing because they have two pieces of news that we can get updates on. at essentially any point, which is why I like it, for example. But that's how just kind of my nature of doing stuff. And it's like you'll become less of a bag holder if you know to a degree. Like, you need to know what's going on. You need to understand sometimes, like more than you should understand, right? What the company does, what they have in the pipeline, how much cash they have, if there's a threat for an offering, do they recently do an offering, stuff like that to set up your trades. But if you know that stuff, you're in a much better position. And if a stock falls below a certain level, or they do something like an offering that you don't like, or there's some news or whatever, just cut it. Who cares? Like, there's something else. That's how I see it. So, cut loss and a stop loss. I don't know. Stop loss means like, okay, you can set a stop loss. I use mental stops. So I use a key level, and I'm like, okay, if the stock drops below that level, I'll cut it. I'll sell it. I guess that's what you're meaning. And then a cut loss means like you're down on a stock and you're just going to cut it for a loss, maybe. A stop loss is like, okay, there's a point. There's a stop point. Either it's a percentage that you're down, or it's a specific support level that you're down to, that it falls below, and then the stock drops below, and that's it. And you cut it. One of my positions have a reverse split coming. You probably will expect a dip on the reverse split. Yeah, it's interesting though. But sometimes also the reverse splits, you end up, when you get them, you tighten up the float. So many stocks run post reverse split. So there could be kind of like two factors at play. People trying to get in before the reverse split in case, many times a company, if a company, right, if they come out with news right after a reverse, or it's like a thing that companies do sometimes. They'll come out with news right after a reverse split because the float is now smaller, so the stock could pop. And they'll come out with news post reverse split, spike the stock, and then they'll drop an offering to raise cash once they have attention on it. So that's kind of like something that happens a lot too. But yeah, I would be careful with that too. Usually you see a decent dip. Sold positions at a loss, it's fine because now you have more peace of mind and you can always get back in them if they reclaim support and if they look healthier. But if we see further downside in the overall market or those positions, then you save yourself, on that end. So that's that's how I see it too. What else? It's okay. So right now, SPY is in this range into the close. It's like up to like 377 down to like 375, 376. When institution comes into buy, yes and no. Take care. See you soon. Thanks for coming in. I appreciate you guys for tuning in. If you guys wouldn't mind the thumbs up button, we're going to wrap it up once the market closes in a little bit. And then, we'll see what happens. I think I'm going to do that. I'll do the hotkey video because I was mentioning it earlier. Might as well do that because what else is there to do? Short squeeze is when you have a lot of shorts in a stock. So for example, if we go in to look at like finviz.com and we look at, what's a short stock? GME, right? This stock has 30% of the float short. There's a lot of shorts. Anything over like 15, 20% is a significant amount. So when the shorts have to cover, when you're shorting a stock, you're betting on it to go down. So you have to actually borrow shares to then sell those shares. And then you're intending to buy those shares back at a lower price and then pay the borrow fee. And obviously your intention is to make more money on that trade than the borrowing fee costs, and then you make money. So that's kind of the nature of how that works. But when the shorts squeeze, there's a point where like if buyers come in, they start buying the stock, shorts get to the point of like they got to cut their losses at some point, so they're going to stop themselves out, right? They put a stop loss or whatever. They can't lose any more money. They have to buy back those shares, right, to get out of their position. So that ends up squeezing the stock to the upside. But you can't see when an institution buys. It could be a high volume. It could be, or that could be there's some big money getting in, but there's no way to know, specifically like, okay, an institution bought. You can see that though in the filings of a stock. If there's some large buys, you can see that in the filings. So Are you sure it's not the stock market crash like 1929? Who knows? Maybe. I wouldn't, we don't know. I doubt that, but who knows? Andrew's been on the entire stream. Awesome. That's awesome. You got the dedication over 2 hours in. In terms of a good swing, yeah, I don't know. Well, I mean, I have my swings that I like, and then I have my long-term trades investments that I like. But outside of that, in terms of like identifying swings right now, I have my lists and I have my ideas, and there shouldn't be there's a lot of ideas, but I just don't know exactly where I want to go right now. So we'll let things settle down a little bit more. Basically, SPY is the index. SPY is modeling the it's the S&P 500 ETF. So rather than look at the S&P 500 and where that's trading at, you can just look at SPY, which is the ETF that's going to model that. So that's why I talk about SPY, and it's a good broad overall market indicator, or something. Not indicator. It's just modeling the market, right? So stocks in the S&P 500. Here we go. We can see how they're all handling, and that's what SPY is. Big hedge funds start having to cover their short. I don't think to short more. They could, but if they're over leveraged on the short, then you can't, right? But what happens with a lot of penny stocks too, as you'll see, is they just go on perpetual just short attacks and downtrends, for months at a time, and it's like it just keeps happening. And if you get enough money, and a lot of those stocks are thin traded stocks, so you don't need as much money to move those stocks. So the big money can move those stocks pretty well. Okay, so we got about a minute left. Let's see what happens into the close. Let's see what we get on our last candle here. Do we get a lot of volumes coming in? Obviously at the close is what happens. But do we get a push up into the close? Do we get a big green candle into the close? Let's see. Yeah, the Dow and the NASDAQ in the bottom right. I have the Dow ETF, and then I have the NASDAQ both populated on the bottom right just to follow. I look at the S&P. The Dow is weird because the Dow is it's like Boeing is like a pain, because Boeing's up a lot yesterday. The Dow was up, and it was like, okay, well, everything else is down. So for the most part, so it's kind of a weird. It's kind of a weird one to watch. That's why I like the S&P, because Boeing has a lot of weight in the Dow. I don't know the actual percent or the exact weight of it, but over leverage. So you can go in on margin. So you can go in on margin and borrow money to go into a trade and stuff. So people who are buying on margin right now, I'm not sure if you guys, I'm sure, actually, look at this. We have a green candle pushing into close. So there it is. So we pretty much closed up at 376.72, down 1.23%. So it was down a lot worse, and we recovered decently into the close. But I know if you guys watch Meet Kevin, I know he's over leverage on margin. Not over leverage, he's on margin right now. So he's borrowing money to buy more stocks because there's a dip. And that works out when we get when stocks recover. But it potentially could screw you if we continue to see downtrend or downward movements in stocks, and you may have to sell stocks just to kind of meet your margin requirements, because each broker kind of will have requirements of what you need. And then so it's the opposite for shorts. So for shorts, how could a stock be shorted more than the amount of shares that are available? Well, that's because you have people who are going in on leverage and shorting a stock on leverage. So, we'll see. Sometimes you get these kind of weird orders that go through, kind of not actually. That's just a kind of a misprint there. Appreciate you guys for tuning in. So now, okay, after hours buys up 0.1%. So it's going to be interesting to see how tomorrow goes. I really would like to know. I mean, I would like to see how if we can follow the past couple weeks. Fridays have been red, so we'll see how tomorrow ends up faring. But it looked like a little bit of buying volume into the close, but nothing crazy. No, I mean, yes. If you look at this candle, the last candle here on SPY is 6 million share candle. So yes, but you kind of see that at the open and the close a lot. So if we look at the open or the close yesterday, Same thing, a 6.8 million shares. Now it was red, but 6.8 million shares. At the open today, we had 2.6 million. So actually a lot more volume into the close, if that's accurate. Or was it? Did I get something? I don't know. Okay. 33,000. Awesome. Thanks. I mean, I appreciate that's all you guys for, subscribing. So that's awesome. I'm excited for the future. But we're back. We're reconnection successful. But if we go back in time, right, we see big drawdowns, but we see big recoveries after that. So you got to have to weather the storm, And worst case scenario, right, you look back, okay, the pandemic was a whole different animal, right? And each of these has their own kind of catalyst, but, they bounce. The bounce is nice. The bounce is going to be nice. So you got to weather the storm. So having more cash on hand is great if you can, so that you can capitalize once things turn. Trading accounts on Twitter. So if you go to my Twitter account, I think it's just tcarvo11, I think, or something like that. If you go to that, you can see who I follow, so that you can follow the same people that I follow. But I don't tweet about stocks on there. I just don't really tweet in general. I use it for some type of for information. But be careful. There's people that I follow on there for a reason, not because I necessarily like them, but I want to know what they're doing because they move stocks. So be careful if you're going to do that. Don't just follow them, and if they start tweeting about a certain stock going to whatever, I follow some people sometimes for comedy, sometimes for not, so that's you can get there's a lot of good trading accounts there, but there's also some that are bad, and I don't want to, I'm not going to say anything to people of what I think right now, but there's some that you got to kind of comb through or at least understand, right? So don't just use it as ideas. Use it for scanners. I like people post charts, people post technical analysis. I learned so much from people like that. But outside of that, there's a lot of bad information sometimes on there, and it sometimes is not good. So I appreciate you guys. We're going to wrap things up because, markets closed, down pretty dirty today, but we were down a lot worse and recovered a little bit towards the end of the day. So not as bad. We'll see how things go. Let's take a peek at the after hours gainers, if anything's moving in the after hours before we dive out. These were all yesterday's. AESE has been a beast. It's been up today, 30% too. Closed up pretty nice. That was a nice play at the end of the day. CSLT, INVO has been pushing up a little bit. It has news. SENS has news potentially. So some of these stocks are pushing up. So we'll see obviously what happens into tomorrow. But I appreciate you. Yeah, we got the pop in the back. I appreciate you guys for tuning in. Make sure on the way out, hit the thumbs up button. I really appreciate that. And then if you're interested, to some point tonight, I'll have a video going over hotkeys. So how to set that up on Webull and how to use them. There's a lot of options. I've been diving into that and just starting to use them a little bit. So tune in for that if you're interested. And I will see you guys in that video or the next video. Okay, peace.